Hey traders, I'm James, one of the content team leaders here at A1 Trading, and as we start today's stream, I wanted to let you know about one of our show's main sponsors, FX2 Funding. With all the craziness going on in the prop firm space, we're excited to share some of the solutions FX2 Funding has put together for their traders. First, FX2 is rolling out DX Trade, which is a web-based trading platform that provides traders a smooth trading experience. It also looks super cool too.
But that's not all. By signing up with FX2, you get access to C-Trade. C-Trade is a trading terminal where you can create custom indicators or download ones from the community. Get access to all of this and more by signing up for FX2.
So, for traders looking to get funded, you can get 15% off by using promo code A1Trading15. That's A1Trading15. The link and promo code can also be found in the description. Now, onto the show.
All right, guys, good morning. Welcome back to another live stream. I got my little intro music to play for you. Hopefully you guys can hear that. As we approach another day in the markets, got lots of trades on right now, lots of stuff to talk about. And what was an excitable evening yesterday, we're going to slowly convert everybody in here one at a time to index, futures, and stock traders. I can't wait to do it. My channel has gone a transition over time where we initially, over time, we've covered a lot less currencies and a lot more everything. And that's been the goal. And I'm really excited that we've headed in that direction. A couple of years ago, my channel was pretty exclusively currencies. Then I added gold, and now we've gone everywhere from commodities, broadly speaking, silver, copper, gold, to looking at indices, to looking at just a little bit of everything. And that's how we like it. Speaking of everything, I'm currently short the Russell again. And this is my third and last try on the Russell. So couple small losses here on the way. I tried to short the Russell over here, and then I tried a second time here. Both of those ended up being small losses, and I've now taken a third entry, my last entry at this level of resistance. Why am I short the Russell? What's the theory here? Well, from a technical perspective, really simple technicals. I think most of us will really quick be able to understand the technical setup here. We have this downward trend going on in the Russell here recently. They've been under pressure. Small cap stocks have been struggling with the idea that interest rates are going to stay potentially higher for longer. But from a technical perspective, we have a downward trend. Price is pulling back. In the short term, bulls have been able to find the low point here around 1906 on the RTY. That's the Russell Futures index here. And so as price has pulled back up into this area, I sold here my third attempt. So I've taken 2 stop losses, and this is the third attempt. Will this one work out? We'll see. If it explodes through the highs, then I will have to humbly accept that I was wrong about selling the Russell, or at least wrong in my timing. The thing is, if you take a stop loss, I take that as you were wrong, and you just kind of have to push past it. So my 2 entry attempts were wrong, even though, the Russell might do something like this and then come down. Was I right about the Russell? I would say no, because if you put on a stop loss and it gets hit, you were wrong about your entry point. So from a technical perspective, we're pulling back. And again, I've tried 2 times before this. This will be my last attempt to sell the Russell and to be short. What's the symbol for the Russell? It depends on which broker you're using. If you're trading stocks like the one that I use, we'll drop the link, by the way, if you'd like to use the same broker as I do, which is WeBull. If you'd like to use that broker, this is for US people and a couple other countries. I think the UK, Singapore, Philippines, a couple other places can use WeBull. If you'd like to check out WeBull, here is the link. I am trading the ETF IWM, which tracks the Russell futures. Now, you could just trade futures market. The reason I don't do that is because I also trade options, and I like to have everything in one broker. It just makes it so much easier for my trading. So I just trade IWM. It is the same thing, just percentage wise, it moves the same. So just a different symbol. But you might be trading it, if you're trading on a futures broker, it might be RTY. If you're trading on a CFD broker, it could be US 2000, maybe. It could be Russell 2000. I don't even know what symbols are usually used. And I don't even know if a lot of CFD brokers offer the Russell. Would you also short the S&P 500? No. And here's the reason. I am not bearish generally the stock market. So I want to be careful here in how I say this. I actually have a lot of long exposure to the stock market right now. Much more recently, I have several positions. In fact, I'd happily show you guys that. Let me see what I can do for you here. So I have several plays on the stock market right now. I sold puts on Tesla. This is looking like a golden trade here today. The options market is not yet open, but when it opens up, this open P&L will probably go up to like plus 80% or 90% because Tesla exploded after hours. We'll talk about Tesla in just a moment. I did a little bit of an earnings play on that. I sold puts at 115 on Tesla. It's trading at like 161 or something like that. So the Tesla shares have exploded in value. Tesla, I've never made more money on any single trade than Tesla. That's a fun fact for the channel. In 2020, I bought a good chunk of it when it sold off. I like the cars. I like the technology. It's high risk play, but anyways, I also sold XLC. This is comm services. You had AT&T report earnings up nicely here this morning. That's also going to include things like Google and Meta. So I like the comm services sector, and it's bounced back a lot. Again, this will update here in just a little bit. The options market, when it's closed, it shows you all sorts of wonky numbers, but it should open in the next few minutes. Anyways, I also have some plays on TLT, which are going really poorly. I also have XLK, which is an XLY. Both of these are risk on, generally speaking, areas of the market. This is technology and this is consumer discretionary. So Tesla popping up here this morning, which makes about 10% of the XLY ETF, is going to do very well for my trades. So I'm having a nice, this bounce on the stock market is quite nice. So why short the Russell? The Russell is an area of the market that I'm not as excited about because of yields going up. So we've seen a lot of strong economic data, which at first glance you might actually think isn't that bullish for the Russell because, again, smaller companies are going to grow fast in a strong economy. That is true. But if you also tag in there that inflation might be sticky and that borrowing costs are going to remain high and that could also lead to a recession at some point, the Russell's not going to like that. So what is going to like that, relatively speaking, and I believe could actually continue to outperform, is some of the bigger mega companies like your Googles and your Apples and Microsofts. So those types of companies, I think, are where I'd prefer to be at. So how can I gain more exposure to that? Well, disproportionately in the NASDAQ and the S&P 500. And then, the Russell is more financial companies, smaller cap companies, and, real estate and stuff like that I'm just not as excited about. So I do have a short position here, but long positions on the indices abroad. So anyways, the ETF is IWM. Yes. So I don't have a short on the Russell. I don't have a short on the S&P 500, the NASDAQ and S&P. The market just opened up. Let's see how this how things start off here today. It is earnings season, so volatility is expected. Today we get earnings from Meta, which will be after the bell. So in 8 or 9 hours here, we'll hear from Meta. This is a ginormous name to report their earnings and will likely move the entire market. Tesla, came out and smashed their, actually, they completely flopped on their numbers. Their numbers were awful. They missed on the top and bottom line, but the market is rallying higher. Why is that? Well, after digging through why this was, what I found out is that they've announced they're still in plans. They're still planning to release a more economically accessible car at some point in the future. I believe sooner than what was expected. There was some hopes for 2025, I believe. So they're talking about launching a more affordable and smaller car, I think. So that was exciting. They also mentioned they're potentially working on some sort of ride sharing application, which, if you couple ride sharing with the idea also of autonomous driving, this is a potential rival story for Uber, right? So you have some excitement in the stock here today, and I mentioned that as kind of a contrarian trade, I actually sold puts on Tesla. And let's see, I don't know if my options are going to update just yet. Yep, there they are. Look at that. So I sold puts on the Tesla earnings ahead of earnings, because I have a willingness to buy the shares if they come down dramatically. They did not. They popped. So I am up $408 on that earnings play that we took and talked about yesterday. So I'm feeling good about that move right there. And you can see everything else is updating as well. So all of my options trades, most of them looking really good. SMH, I sold puts on that, up $600 on that play. XLC, we're up $400, which is nice. If you take a look at XLK, we've come back a long way from this. I sold puts at $200 strike price, so we're just about coming back to that point now in share price value, although this has not yet updated. So once that updates, in fact, XLK, let me just check where that is actually at. XLK is popping up to 98.51 with the premium I collected factored in there. We're probably about break even, which is great. So if I get assigned these shares, then I would be happy with that. The assignment date would be April 26th, so it is coming up soon. Anyways, let's move on. We got a lot of stuff to talk about today. We'll keep an eye on the Russell. We'll come back to that. I also have a play on silver. So silver, I took this trade on stream yesterday off of the daily chart. We're still in this trade. Has not moved that much. Let me just double check that Edgefinder is still giving us a generally bullish reading for silver. Yes. So we still have a +8 on silver. So silver looking bullish overall. We'll stay. I'm staying in that trade for now. I like the price action as long as we don't break support. Why is this getting a bullish reading on silver? Well, let's go take a look at the commodity scanner for a moment, and I'll show you the full read on silver. By the way, if you do have the Edgefinder, highly recommend that you check out our new data scanners section. What this will allow you to do is, if you have a interest in a particular chart, whether it be a commodity, gold, indices, FX, whatever you want to look at, these scanners will allow you to itemize everything that you want to look at. I know a lot of you guys are regular Edgefinder users, and there's kind of a hope that you'll continue to watch the streams and videos regularly, because we make changes and updates all the time. We're trying to improve it as much as we possibly can. So when we make these changes, keep up with the videos. It's one of the best ways just to hear it talked about, whether it be from me, Frank, or someone else on our team. I know also on the A1 Trading YouTube channel, James does a great job keeping people up to date with things that are changing. He's parsing through the Edgefinder day in, day out. So always recommended that you stay up to date with this stuff. Anyways, check out the commodity scanner. Let's do a walkthrough on silver together. So the commitment of traders data looks really good for silver. There's a high proportion of long contracts relative to short contracts, and that's something to keep in mind. Also, I need to fix this weekly change. I'm not sure why that's not showing up. But COT data overall looking positive for silver. Big money likes silver. That's great. If we see institutional money flow into silver, active buying of silver, that's a positive for the metal and keeps me on the bullish side. Retail sentiment is not so positive for us. We can see that retail traders are mostly long on silver right now. So that gives us a -1 score, as we use this as a contrarian signal. If retail traders are heavily long something, we stay bearish. If they're short, we stay bullish, right? That's the idea. Seasonality, let's have a look at this. So seasonally, we expect during the current month, the month of April, we've seen over the last 10 years an average performance on silver of a gain of 0.38%. That's a tick for bullishness. Take a look at the trend overall. We've seen that on the daily charts pretty obviously, still in an overall upward trend. Inflation statistics. Inflation remains elevated, and a high inflation environment is usually pretty good for industrial commodities like silver, copper, oil, etc. So when we look at inflation data, again, we've got some blue over here. Inflation remains hot. Also, can you do me a quick favor? If this is helping you, hit the thumbs up button on the stream. It really helps just to let us know that this is helping, so that I can keep going on. And I don't want to, if this is beneficial, these breakdowns are helpful to you, just hit the thumbs up button on the stream. Okay, so let's keep going. Interest rates, right? Interest rates rising are generally not great for silver, but we use a pretty tight moving average on the 2-year yield. Let's have a look at the 2-year yield. So it is slightly rolling over. If this were to continue to come down, that would be slightly positive for silver in our calculation, just because that could indicate potential rate cuts. But yeah, we'll keep an eye on that. Also, let's keep going. Interest rates. We did GDP. So GDP numbers have come out stronger than expected. This one's pretty straightforward. They beat forecasts. When GDP beats forecasts, we take that as a bullish signal for industrial commodities. Okay. So bullish commodities because of that. Services PMI came out weak, not great, but manufacturing beat. That's positive. Retail sales numbers, and we're talking specifically about ISM. I know someone out there is already saying, well, what about flash? We track ISM in the Edge Finder. Retail sales have been strong. Employment change and unemployment rate are mixed in terms of how it impacts the score here. So what we can see is that, in fact, I need to check this. I don't think that's right. Hold on. Let me before I forget here. Employment change. So we had more jobs than expected. That should be positive for silver. So I need to fix that. That is a blip in our calculation. And again, let me write that down. I'm going to email it to myself so I do not forget to fix that. Sometimes I catch, the Edge Finder is a constant, improvement feedback loop and fixing process. We're always working on it. So let me do this. Silver employment change calculation fix. All right. I just sent that to myself. I have to do that right when we're doing stream, because if I don't, I'll forget, and I do not want to forget that. We are constantly, like I said, we're watching it like a hawk. So yeah, thank you very much for the feedback. If that was helpful to you, again, hit the thumbs up button on the stream, and appreciate that. So again, I do have a silver position right now. It's about flat, hasn't really moved either direction. So I'll show you my SLV trade. We're up $230 on that. And on my, where is it? IWM, we're about flat. So the Russell's all over the place. You can see now it's gone into positive territory here on RTY. So we're just about at break even on the Russell. Seems like the stock market is pumping here this morning. Here's the NASDAQ up. Again, earnings season has been strong recently, and we've seen this, kind of across several different reports. With Tesla going up, that's going to be really good for specifically consumer discretionary, which I do have a bullish position on. So not bad at all. XOK technology also up strong on the day. Semiconductors flying high as per usual, it seems like, although they had a pretty nasty sell-off. They're bouncing back really strong here. And if this day, if you get a third strong close on the day, I would say that's really positive for semiconductors and the market as a whole. We'll have to keep an eye on it, though. It's early in the day, and the market has been doing this pattern, not so much recently, but I've talked about this a little bit. We've had this little pattern that has been going on where you rally in the morning and sell off in the afternoon, but not so much in the last few days. And I think if you get a third day where you get strong push and it holds those gains, you're looking pretty strong, especially, if you get some sort of pullback and bounce off these levels. From a technical perspective, this could, as crazy as it might sound, could be a bottoming point for the stock market. Now, some bearishness that you could toss into the mix, though, is that yields are still rising, right? Yields rising has arguably been one of the reasons why the market has pulled back. If yields continue to rise, that probably puts some negative pressure on some of the more interest rate sensitive areas. Do you think the NASDAQ is a bull trap? So let me just give you a disclaimer about my thumbnails and titles. They do not always indicate what I actually think. I don't think that this is a bull trap per se for the NASDAQ or the S&P. I know my titles and thumbnails are provocative, and they're fun, and they're meant to just be an exciting teaser for the video. But in terms of the NASDAQ, I have several tech heavy kind of focused risk on trades that I've talked about already, right? So I don't think that the NASDAQ is going to just sell off a cliff this year. I remain bullish overall, and I have built some positions into this sell-off. Now, that being said, could we roll over and test these lows? We totally could. In fact, if it breaks those lows, I've already mentioned that I will be looking to actually add some positions on some of my wheel trading strategy stuff, my mean reversion trading strategy stuff. I would happily be able to build some bigger positions on that. So right now, I think the big test point for the NASDAQ, if you're watching NAS 100, is, if we get up into this 17,800, 17,900 area, how is the market going to react? Is it going to, take a straight shot up here and then just get smacked back down? Or is it going to plow through that level and actually find support and rally? I'm very curious on how this level reacts. I think if you're not in the trade right now, I think I'd be careful of chasing this move, because I think the probability that we just V up back to the highs is unlikely. We do have some genuine concerns in the financial market right now with rising yields, geopolitics. I mean, to me, it's a little bit of a tough one to say, I think we're just going to rally back to the highs right away. That being said, I'll take advantage of the dip and buy certain areas of the market that I like more so than others. Let's take a look at gold now. Gold, arguably sitting at some support levels here. Let's take a look at the 4-hour chart. So, I think the momentum trade for gold has been lost. What we saw was just this beautiful upward trend. And a lot of money was made there on the way up. I was long for most of the run, missed some of the last leg of it, but we've since gone sideways and now have started kind of trending lower, arguably. I would say if you're a bear on gold, this is the level, right? Bears have to prove, in my opinion, the possibility of moving lower here. I think if you break this level back to the upside, bulls could just take it back. And even if we go sideways from there, I think this is a really key spot for sellers. Now, I am not bearish on gold. In fact, my output on here is going to be neutral for gold. And again, the reason for this is you can see there's some blue, there's some red, right? We're mixed here. Now, if you look at the economic data sections, right, which is going to be these areas here, this stuff is kind of mixed. You've got an area or an environment of higher inflation, but growth is still there. So as long as growth is still there alongside higher inflation, I don't think we have our stagflation environment per se, right? Stagflation was an area where I was really bullish on gold, because if you're seeing slowing economic growth, right, faith in the economy could start to diminish. At the same time, you have sticky or stubborn inflation. That's the environment where I want to be long gold. We've kind of lost that recently, in my opinion, because we've had a lot of strong economic data, right? Manufacturing PMIs came out really well. Retail sales have impressed. GDP forecasts relative to the current is, we've had some impressive economic data out of the US. That would also suggest why yields are on the rise. So when we take the full picture in, we get a mixed reading, only a +3 on gold. So no trade for me on gold. And again, I can't force a trade. I can look at the technicals for you. But again, on this channel, we mix technicals and the stuff that really moves the market, which is fundamentals. If you ever wonder why big moves happen in the markets, it's always accompanied 100% of the time by some fundamental catalyst. There's always a reason for why markets make significant moves. Now, you might get intraday blips. If you're looking at a 5-minute chart, you might get some crazy, just purely technical jolts back and forth. But usually the big moves off the 4-hour chart and the daily chart are accompanied by some sort of serious fundamental catalyst. For example, this move didn't happen just because we hit a support level or we broke out. The reason such a big market move happened here for gold was because there's a concern about the Middle East and the conflicts there. That was a serious, driver for gold. And at the same time, government debt is rising, continues to go higher and higher. And at the time, there was an argument for economic data cooling while inflation stayed hot. That kind of propelled us, not so much recently, and perhaps that is what is causing a bit of the pullback in gold. That would be my opinion, my take on gold currently. I'm very neutral because we have hot economic data and high inflation. And geopolitics are cooling. So I just two mixed signals for me to really take any high probability trades on gold. Hopefully that makes sense, but that's where I sit with it. The VIX is coming down, still continuing to sell off here from its highs around 21. We've come down to about 15.7. We'll see if the VIX bottoms out here and we start to rise again. That would probably be accompanied with some sort of sell off in the stock market. And possibly could pump gold higher, right? Elevated VIX is usually a signal of fear in the markets. Fear could be bullish for gold. So we'll keep looking at that. Let's see what else we've got. Quick look at yields. Again, here's a 2-year yield, 10-year yield, and 20-year yield for government bonds. They continue to rise. Bitcoin, 66,000. Again, kind of still staying sideways here, despite the having, the question is, can we break decisively one way or the other? I really have no opinion on which way, but if it does break out, you probably get some momentum trades that continue to push. Let's take a look at the euro here on the daily chart as it continues to push higher. I do actually like this for a possible sell setup. I'll flip the scores here. Euro dollar as a possible sell setup looks interesting to me off of the daily chart. So let's go ahead and mark up kind of this range here. We're very close to a level here that I like. In fact, I bet you that's a 50% retracement. Nope, not quite. So 38.2% retracement. The 50% would put us right here. So possible sells could be interesting in my opinion. As always, please do not take a trade just because you hear me talking about it. I am not always right in the markets. I've been wrong twice already on the Russell this week. So please understand, I do not get it right all the time, and you should not copy anybody off social media just because they said something. It's a very foolish way to approach trading because you don't know the underlying strategy, risk management tactics, etc. Okay, so we'll keep going. Pound USD looks interesting. Possible pullback up into this 1.2550 level. Take a look at dollar yen. Dollar yen continues to be strong. Any pullback, I think I'm a buyer on that. Dollar Swiss, dollar CAD, Aussie dollar continues to pull back. Will be very interesting to see if this closes like that. That could indicate perhaps some weakness for the currency pair. I believe we still have Aussie dollar as a bearish setup on the edge finder. So that's some added confirmation. I think there is actually some pretty good currency trade setups forming with confirmations from the edge finder. Also, quick notice, remember, our sale is ending on the edge finder. If you are somebody who watches the stream regularly, this is pretty much your last call. We are doing a 45% off sale. We've done it this month. We are closing down that sale. This is the biggest discount that we do all year long. And the reason we do this is because we've launched this product behind the scenes. We have a team of a total of 10 people involved at A1 Trading and doing what we do. We build tools for traders that help traders approach fundamentals in a more reasonable way. We have a development team. We have a team that helps people train through the products. And while we speak, again, we're celebrating 2 years since we launched this product. This sale is ending. It is our biggest discount of the year, and we do plan to raise prices going forward. So this is a heads up that this is going to be your last chance to get the biggest discount ever on the Edge Finder. So here is the link. If you like to speak to someone on our team, The reason we do this is so that if you have any questions or concerns about the tool, if you want to figure something out before you buy it, please speak with us directly using this link. Someone from my staff will help you out. Also, if you do want that discount, they can just help you out. Just give you the link and promo code if that's easier for you. So click that link, take advantage. Again, last chance. We're closing that sale up, and then that will be the last time ever that we do such a big discount. So don't miss out on it. Last time that we'll ever do that discount for the current price. We do plan on, like I said, raising prices on the Edge Finder over time. We always do, just because our upkeep costs has gone up over time too. So outside of that, let's keep pushing along here. NASDAQ up 0.74%. And again, very curious to see how prices react as we come in closer to this really key level. Once we sold off from this level previously, it was, look out below. So I'm wondering, as we approach that level, if the market will react similarly, or if we're going to just break through that level. That to me is the very interesting thing to watch. With this bounce, I'm liking this a lot, because again, a lot of the stuff that I sold puts on that I'm bullish on, right? SMH, XLC, XLK, XLY, all of them are up on the day, which is awesome to see. So these trades have come all the way back from being very much in the red, XLK and XLY. And then we're nicely in the green on SMH, XLC, and then also the VOO shares that we got assigned are looking great as well. So we'll continue to watch this. The trade on the Tesla earnings, I am considering just trading or closing out. We've collected, I showed you just a second ago. Let me see. We've collected currently we're at like 85% of max profit, but the expiration date is not until May 24th. So I may choose to just close that out. If we pump one more time on Tesla shares, I will probably just take profits on that move. That's probably what I'm going to do. In fact, after the stream, I may just put out a pending limit order to close me out of those puts that I sold, to buy to close those puts and just take my profit on it. So we will probably do that here after the stream. But yeah, Tesla bounced really nice from their earnings. It was a bit of a counter trend play, but we were looking quite oversold, and markets were incredibly bearish on Tesla going into the earnings. It's a company I wouldn't mind owning a little bit of in the portfolio. That's why I sold two put contracts, and doing okay on that one so far. So we'll keep an eye on it. The dollar index pulling back slightly, but we do have some key data ahead. We have ahead of us PCE numbers on Friday, and I believe I need to double check. I believe we have, let's see. So tomorrow we have advanced GDP. So advanced GDP and unemployment claims tomorrow, pending home sales, and we hear from the Bank of Japan. So tomorrow is a big day for financial markets as well. So yeah. Do you think COT data is correlated sometimes with the news? I noticed CAD added 30K short contracts and the CAD news was bad. I think sometimes, big money has knowledge of stuff that perhaps not all of us do. And I don't know if that's, it's not something you can really accuse them of or know for sure, but big money has connections all over the place. You can speculate and conspiracy all you want, but obviously we do not have those same connections or knowledge. And who knows? Does insider trading happen? Yes, it does, right? They bust, people on Wall Street have been busted for doing that. So to think it's not happening somewhere, somehow is kind of crazy. COT doesn't indicate any aggressive shorts being added that is supporting that strong bearish leg on the indices, which tells me that it was just a manipulation unless we see this week's massive numbers. Yeah, so I would say that this move lower is probably not manipulation. It's probably just, in my opinion, a healthy pullback in an upward trend. Now, was there no reason whatsoever? No. Manipulation would be there's no good reason for a sell-off and it just blipped lower, took a bunch of people out and moved higher. I think there's a fair reason for why the stock market started to sell off. You have high-priced stocks and now a Fed that potentially looks like they may not cut rates for a while. And if the Fed does not cut rates for a while, it is going to hurt certain areas of the economy. And if they keep rates higher for longer, it increases the possibility that the Fed makes a mistake and that we do see a recession. So this sell-off, I would say, is valid, and also why I don't think, I could be wrong about this. I would love to be wrong because I have bullish positions, but I don't think we just V recovery this move, right? There's your V. I don't think that happens because I think there was some genuine concerns about yields creeping higher, right? And the concerns of if you keep those interest rates high for a long period of time, what's going to happen to government debt? What's going to happen to companies that are hurt by that or potentially would really struggle if the consumer does start to slow down? So part of the reason we may have seen this bounce, you could have pointed to, company earnings have been pretty good. Here's Visa. Visa reported yesterday, strong numbers. Visa is an indicator in some ways of the consumer, right? They offer cards, right? Debit cards, credit cards. If those numbers are coming out really strong for them, that's showing a strong consumer, which is good for companies in terms of earnings, but it also suggests consumers strong, inflation staying sticky. We have a problem there too. So that's where I think that, yes, the stock market remains overall bullish in my opinion, but I think that this sell-off was justified in terms of a corrective move, and I would not be shocked to see this thing roll over and potentially test lower. That's not what I think is going to happen. I think what is going to happen is that this will be a pullback and that we probably see this market recover. I just think it's not going to be a straight shot up. And I think that we probably will have a little bit of a consolidation period here after this crazy run up that we saw. Really, really strong stock market. We've pulled back. I think it's fair to say we may just see a bit of a corrective period or a little bit of a pullback as we try and gauge whether or not the Fed is going to still cut rates, right? That's the question. Are they still going to cut rates, or are they going to talk about hiking rates? If hiking rates becomes a conversation, then we have a problem. If we see, rate hikes are a possibility or an increased possibility, and we double back and now we're not talking about rate cuts anymore, but now we're talking about, holding and potentially hiking rates, that's where I think you probably get your 15 to 20% correction, or in that point, 20% being a bear market. I don't think that's what's likely to happen. And I think I'm not alone in that. That's consensus, is to think that, that's not going to happen. But I think it's worth mentioning that that would be the catalyst to, in my opinion, to really get us to sell off more aggressively. But currently, that's not what we see. And so I'm treating this for what I believe it is. I believe it is a pullback until proven otherwise. So we're in a strong trend. It's an election year. I'm a buyer on dips constructively in certain areas of the market that I like more than others. And I've mentioned that I like big tech, big profitable tech, not your Cathie Wood ARK stuff. I don't think it's the time for that. I think that's a really, really high risk, of course, high risk, high reward trade as always. But let me just tell you that if you, what is the ARK Invest Innovation Fund? It's Cathie Wood's collection basically of unprofitable technology companies. Some of them I think are profitable, but a lot of them are not. They're running at deficits, but they're like change the world technologies, which is very cool stuff to think about. But there's a lot of hope baked into that. What I think investors and traders alike, myself included, like about companies like Google, Microsoft, Apple, etc., is that they have relatively predictable growth. Maybe not so much for Apple. Apple's had some slow growth, but they're still very powerful companies, right? They have a lot of pricing power. They can continue to grow and despite interest rates still do okay, I think. So I like those areas, even though if there was rate hikes, their pricing would dramatically need to come down because, again, their multiples, the earnings per share would come into question. Anyways, real quick, guys, what we're going to do here is we are going to thank the sponsors of the show, and then we'll be joined with Chris Pulver here, who's going to come on, take over the show for a little bit, and talk a little bit more markets with us on this advancing stock market here today. Take a look at commodities, indices, currencies. As always, we'll do it all. So stick around, coming in just after this.
Attention A1 Trading Show fans, if you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, and we are back with Chris. Hey, Chris, how's it going?
Good, Nick. How are you, man?
Good to have you back. Happy Wednesday. Today, Chris, is I think we're getting pretty close to decision point on this move here with the stock market, whether you're talking NASDAQ or S&P. Today is the third day of this bounce, and I think we're getting close to decision time as to whether or not this is a bounce or before a sell-off, or if it is a bounce that turns into just a rally back to the highs. I was talking a little bit before you came on, Chris. I don't personally think that this will just be a V-shaped recovery, though crazier things have happened.
Right.
I think that there is some genuine concern that's changed the story a little bit from just the rally every day move that we saw for the first part of 2024. I think there is some genuine concerns. You've got creeping, higher interest rate or yields, a Fed that has backed off on its super dovish tone. But what do you think? I mean, where's the line in the sand for this bit of a bounce we're seeing?
Yeah, as we talked about this week, I mean, to me on the SPY, the 513 level is where, that was our previous floor that was broken. So if the market's going to come back and test that, but still be controlled, or at least give the bears a chance to control the move, that's really where the test would happen. So, what was interesting is last night, Tesla had, I read like an earnings summary. Pretty optimistic overall. Tesla pre-market was up quite a bit. I was looking at that all morning. I ended up closing out my Tesla earnings trade. It's a little disappointing.
Chris. I gotta close out my option while you're talking. I'm gonna set a limit order for that.
Okay.
I sold puts, doing okay on that one too.
Yeah, that's good. I just had the reverse iron condor that was a 142. I can show you right here. So if I go into Tesla. I took the trade for a 1070 debit. I closed it out for $13. Right now, if I do a similar order, it's trading at $13.75. So I left a little money on the table, which is disappointing. Initially I had a credit set at $14.50, but because the my sell option on the long side, I had a 142 by 157.50. That 157.50, the value changed so dramatically as price blew through it. I mean, price is $8 and change through that level. So as a sell option, it changed the value so much that I'm not getting all of my, decay out of a sell option like I typically would until time passes. So anyway, I mean, I left some money on the table, but I still made $230 per contract, which is totally fine. And I mean, let's look at that from a percentage standpoint. 13 credit minus 1070 is a 230 divided by 1070. I still made 21.4% on the position. For earnings plays, high probability, I'm always happy with a 15 to 25% take profit for high probability. Earnings like Spotify that blew through it, and I made 100% on that position. That happens every now and then. I closed out small losses on BX and Alcoa yesterday. So anyway, it's still fine, but my max profit was going to be $14.50 or $15 anyway. So the fact that it's trading at $13.75, $13.90 today, the closer I get to $14, I still would have been closing out today anyway. But the point is, your position's looking good. Tesla's probably making a nice little recovery. But I talked about this morning in my trading room, and I want to go back to the indexes here in just a little bit. I don't think this is the start of the big rally on Tesla either. I mean, to me, this company's been beat up so badly. It's one of the worst performers of the year so far as Mag 7 goes. And I would love to say that Tesla's going to be in my portfolio, but to me, it's going to have to be out here and obvious before I'm like directionally long, directionally more
Yeah.
aggressive. Because I mean, I was with you. I was actually looking when we talked yesterday. I was actually looking at doing, $100 puts as well,
Yeah.
going out like 30 to 60 days. But I mean, they were offering like maybe 60 cents. Like that's a lot of capital to tie up on a naked put just to go out and see. I'll get $60 in 3 months, and I'm not going to do it because if I own it, I'm not going to own like 1,000 shares of Tesla. I've got 1,000 shares in dividend stocks and other stuff. But
Right.
anyway,
Well, that's the
good
thing.
trade
So, Chris,
overall.
I'll just give you my update. If we switch over, this is it'll be
Yeah, yeah.
really quick. So, this was my play on Tesla. Was essentially I would have been a buyer if we just tanked through the lows. Just as small portion, I was going to take 200 shares, put in the account, and just let it sit there. Um, for better or for worse, at $115 a share. We talked about that as that previous low level that we pulled up on the daily and weekly charts. Sold that put. I collected $2.56 per share, so 200 shares, 2 contracts. I just closed that out, guys. For those of you who are in the Discord with us, I just shared that I just closed out the trade for about an 85% of the max potential profit. $420 just to basically stake that I would buy a company that I'm not a super bull, and I agree with you. I don't necessarily think the bottom is in for Tesla. It was just so hated, Chris, and we talked about
Sure.
this before. It was so hated by Wall Street and everyone, and their grandmother was sending them death threats. Everybody hates Tesla so much, and here comes the earnings. They were bad. I mean,
They
immediately
were
Frank and
terrible.
I were like,
And
they're
that's what I was just
terrible
gonna say. It's like
numbers.
they missed top and
Yeah.
bottom, and yet the earnings ripped. And I think that's a classic example of what earnings do, right?
Yep.
You can think you've got earnings nailed dead to rights. Doesn't matter. I mean, Netflix blew out revenue expectations, but they shifted from, hey, we're not going to show subscribers anymore. Netflix was down $60-$70.
Yeah. Yeah.
Tesla is one of the most despised stocks right now and performing so poorly, missed on both sides, EPS and revenue, and yet it's up. I mean, that's a big jump. That's actually I calculated about a $15 move this week, and it's way beyond that. We're up like $25 for the week. So I mean,
Yeah.
it's almost a 2
Exactly.
standard deviation move.
Yeah, and that's the thing is, so I'm just going to take the profits on the move, and I actually am with you. I would be a buyer of Tesla.
Mhm.
I would be happier to directionally just buy the shares outright if we saw higher lows and higher highs and strong earnings and a set path towards new products and excitable stuff. Like right now, I think the problem with Tesla and why I only would have bought it if we just absolutely tanked is that it's a hope trade. You
Yeah.
don't have earnings growth like you used to. You don't
Yep.
have, there's not just hard stats to back the company's valuation. And in my opinion, Chris, although this is exciting news, they talked about a ride sharing, game changing thing that they're talking about, an economy friendly car.
Robo-taxis, autonomous
Yeah,
vehicles,
robo
yeah, all that
taxis.
stuff. Yep.
There's excitement all there, but it's a lot of hope mixed in there. And I'm not
Correct.
saying that's not, it could come true, and let's hope that it does. That'd be game changing or world changing. Everybody would love that in the long term, just like everybody loves that Amazon became such a big winner. But the thing is, hope is really hard to place investments on because hope
Sure.
can get destroyed. So you have to be really careful, especially in this market where we might see, Chris, higher for longer. That's also why, Chris, I think when we get back to the indices, and I want to talk gold too about this.
Mhm.
My desire to be long on gold is not really as much as it once was. I think geopolitics are a hard thing to really invest or trade based on, and what we're left with is rising yields. Not the greatest story for gold, and why I also think the recovery for the Nasdaq and the S&P will not just be so easy peasy. I think there will be some pushback. I think bears are still lurking in the shadows. What do you think?
I think so too. And we had mentioned this week, and I still think that this high, low, lower high, lower low plays out. And if you think about this, I think this is an interesting correlation to consider. Let's go back to this correction here from summer and fall of 2023, because we had a 10% correction from this peak here in July to the bottom here in October, and that actually happened to be the same time that we saw the US 10-year heading higher.
Yep.
So when the US 10-year headed up to this level, okay, stocks were actually falling. And it wasn't until this thing hit the peak that the stock market started to find a bottom. So the fact that we are rallying up here and we've had a fairly contained correction so far. Look, this correction right here was a high, low, lower high, lower low, and I want to say lower high, lower low on the stock market. Okay. Over
Yep.
here, we have a high to low. And then we're just now putting in, 3 or 4
Yep.
days of correction. It wouldn't surprise me if we have a lower high to lower low getting put in to have some type of corrective channel that maybe puts the brakes on this crazy, ridiculous rally that we've seen right out of the gates. So let me make sure I have
Yep.
that right. Yeah, that's right. So high, low, lower high, lower low, lower high, lower low. If we do the same type of thing over here, we could still take this whole area where it's all-time highs to maybe previous all-time highs, and maybe that's our corrective area before we get some type of, justified, maybe late summer, fall catalyst if they, if I don't know, maybe they cut rates. I'm still looking at the whole situation. Like, I mean, if I don't know if you've been watching mortgage rates. Mortgage rates are like 7.35 to 7.5 right now for the average 30-year. That's
Chris,
not a good,
I want
that's
to buy
not
a
a good
house.
thing.
I want to buy a house. Of course, I'm watching the 30-year
Okay.
mortgage.
That's yeah. Well, I mean, let me know how it goes, man, because
Oh,
I'm in the situation where I'm selling a house and I know I'm
yeah.
selling a house at, top dollar, which is great, but I know that I also am not stepping in to buy a house at this time. I just think
Yeah.
to me, it's silly to step in when I closed on a house at 2.7%.
Yeah.
Why on earth would I look to go out and buy something at top dollar at 7 and a
And
quarter
that
percent?
right there, Chris, is that's the whole issue why supply is not moving. People who have homes and have had locked in interest rates that were way lower, they're like, why would I go step out into that minefield when I
Right.
could just kind of wait for a bit and wait for things to cool off? And so
Yep.
I think they will cool off. But again, what we've seen recently and why specifically real estate, we could go down XLRE for a little bit. XLRE hating the recent uptick in the 10-year yield because it takes away the prospect of real estate flying high because
Mhm.
people have been really banking on interest rate cuts to free up the supply a little bit, get things moving again. That would be good for real estate. But not so attractive here recently. Chris, I want to ask you about gold specifically because we've talked about the stock market and how rising 10-year yields kind of threaten the story there. My concern with gold and why I'm not as bullish as I was, I rode most of this move up. It was one of my best trades this year. Well, it is my best trade this year so far. But I'm out of it recently,
Mhm.
both from a technical reversal on the lower time frames that trailed me out of a trade, but also because the economic data coming in so strong, which is pushing yields higher, to me really threatens the story and questions how are we at such high prices on gold if we're losing the geopolitics story and yields are higher. What do you think about gold right now? Is there room to come down or is it just going to go sideways? I also, before you answer, I'm a perma bull on gold because I think that it's very undervalued in the broad scheme of how many dollars they print. That's my Peter Schiff in me, but that's what do you think?
I mean, I'm with you. I just think the hard part technically right now is to justify how do you trade gold after making such a rip that it did. I mean, look,
Mhm.
I'm with you. I mean, I think if you're taking stabs at gold, the trend has been established. I don't think that we're going to see a monster reversal. I mean, you
Mhm.
have to remember this was a breakout that has been 2 years in the making.
Yes.
So, and like you've been talking about, I mean, some of our biggest moves in gold have happened in such short time frames that this move right here, even if it just pauses for a little bit, I mean, technically, now that we've hit this level, it's like just take this stretch, get a decent pullback level. I think we still have the measured move from this range, finishes out around 2470. Now, as a trader, I would say that that's my profit target between 2470 and 2500. As a perma bull, do what you do, which is if you get good levels and you're in profit, cancel, replace, move your stop loss, and just
Mm,
be a passive manager, but be a perma bull. For
right.
me, technically, I think silver is a better trade at this time,
Me
just
too.
because I can measure it. I can measure silver. We haven't hit those crazy levels yet. This swing from lows of 2020 into this high of 2020, that was a March to August swing. I'm measuring out here towards 35. This is why I like silver just a little bit better, at least
Mhm.
for an outperformance until this level's hit. And if we have a 5-way move on silver, we're talking in the 40s, which percentage wise is going to outperform gold. The problem is silver's always the lagger. Silver's always going to play the catch-up trade. You have to have like the gold and silver ratios all equal out, or have it be so divergent that they revert back to give silver the chance to perform well. But technically, I just like silver a lot more right now.
Yeah, I'm with you, Chris, on silver. I've also mentioned I like it a little bit more from a industrial metals perspective. I
Mhm.
just think that copper, silver, the world economy has kind of shown some surprising numbers across the board, especially in the U.S. Right, so stronger than expected economic data is a high demander for raw materials, whether that be oil, silver, copper. Gold, of course, benefits more in like a safe haven,
Yep.
park your money in something environment, which I think that we've kind of lost the story there, where we had a little bit of fear about stagflation with slowing economic data and high inflation. Well, we've seen also now that economic data is still relatively strong amidst that high, strong inflation, in which in that environment, I like things like copper and silver more. So,
Yep.
I
Speaking
don't
of
know. It's
copper and
it's kind
silver.
of an interesting, commodity environment. I would say high inflation and high growth commodities that's where you want to be long commodities. So,
Yeah.
at least the industrial commodities specifically.
Very true. Speaking of commodities, so I haven't looked at FCX in a while. I was long in FCX and all this chop here in the mid 30s. Had a nice little run on this. I'd like to say that this one has room to run. Let's look at copper futures for a second. Copper futures. I think is it HG? That's my feed. Yeah, HG. So we're
Yep.
trading at 447. Yeah, I mean, I wanted to get long here around $4, and I mean, the futures market it's priced differently. I can't really justify like, oh, I'll just get in. I mean, what's the upside? I mean, this is also on if you go to a weekly chart here on copper, I don't know how much higher we can go outside of maybe $5. I mean, this is usually not a ballistic running asset. So the fact that it's broken out, the fact that it looks good technically is solid. But if we reach
Sure.
all-time highs here or revisit the $5 and let's say 502, 503, I think copper's run is going to be contained after that. So there's still some upside potential. But here's a play that I like. Traders in my trading room, we've been taking some stabs at this. This is
Mhm.
uranium. This
Yep.
is another
Yep.
one when it comes to, it may not be the sexiest trade out there, but as far as technically, this low to high pulling back, getting a nice little wedge. I'm getting long. I went out, Nick, towards 2026, and I'm
Mm.
just doing like this extreme leap on uranium, and I bought a $20 call for like $9. And I'm
Okay.
just going to spend every 30 to 60 days selling against it, maybe 30 to 50 cents, 30 to 50 cents.
Hmm.
Let's see. I did this trade yesterday. I put this on. Let me go to URA and I'll show you.
This is cool. I didn't
I'll
know. I'm just pulling up, Chris, while you're talking about it. URA.
yeah.
I didn't realize there's a pretty liquid options market for that too. That's awesome.
For sure. Yep. So URA is the one that I focus on. If I look at like physical uranium, there's other ways to trade it. Like URNM, URA are the two that I focus on the most.
Hmm.
So here's a trade that I took yesterday. I went out to 2026 January. So I'm taking in like the gamma squeezes and the open interest levels and all
Hmm.
the I can't remember what there's a weird like I think they're called like Vanna charm or something like that. It's like a fancy way of saying like all these leaps in December and January levels through this year and next year. Like they kind of float to these big levels. Anyway, doesn't matter. But so I did a debit of $12.23. And it looks like every 40 days or so, about 80, we'll just say 80 days. I'm getting 20 cents. So let me just do some quick math here. I'm going out 632 days divided by a 60-day cycle. Okay. So that gives me 10.6 0.5 times, we'll just say 10 times to lower my cost basis. If I can lower my cost basis from $12 and change down to $10, okay, that puts my break even around $30. URA is trading at 29.27 right now. So even if nothing happens, if it stays where it is for the next 2 years, nothing happens, and I'll just sit and I'll basically take a break even on the trade. But the measured move for me, just looking at the charts here, even with this first breakout trade, I'm measuring URA up to $40. If we have a 1, 2, if this is wave 3 to $40, 4 to 5, we're talking $50, $55, $60. If I can turn a $10 call option from $20 into a, let's say $50 move, that's $30 of credit, and it's going to cost me $10 to take the trade. So, it's longer term, but to me, that's a 2x trade. I take $10, I make $30, I walk away with 200% profit on that position. It adds up. I mean, for me, this is probably, it's about a 1% risk to make a 2 to 3% gain. And obviously, if it looks better, I can trade more with credit spreads. I can trade different options. I could also buy URA and just own the shares, which in some of the portfolio, I do have some ownership of URA. But I would say if I want to own it, I don't know if we're just going to elevate and stay right where we are at these current levels, because we might pull back. I mean, this is probably one that if I own the shares, I do want to have some protection just in case it gets a little nasty. But if we have this indecision, taking a stab here, premiums are decent. Protection, I'd make it dirt cheap. But if we're breaking and going higher, ownership's not a bad play either. Taking 100 shares of URA to make, let's say, it's gonna cost me $3,000 to make me $3,000, give or take. Not a bad trade, but with options, you can certainly make a lot more as far as percentages go. Just a matter of what you're comfortable with. But anyway, so look, uranium, copper, oil started to show some resiliency this week, which is a little bit more on pace with what I think we're looking at geopolitically with, conflict in the Middle East, escalation in the Middle East. And again, I'm surprised that we haven't rallied faster or higher. I still think oil I don't know, man. Do you think that 2020 negative futures prices on oil, I feel like the market kind of fixed itself to maybe prevent that from ever happening again. So even with geopolitical tensions and stuff, it's like maybe oil's not the $200 barrel that everyone thinks it's going to be.
Yeah, and that's the thing. I think that if you are bullish on oil, you definitely, I had this conversation yesterday with Ivan just shortly before you joined. I think that if you're going to look at, oil, you do want to probably be a bull when it's actually come down. You don't want to chase it into a reported news. Now, right now, the market's now kind of thought, okay, it looks like we're actually going to get some de-escalation. I would say that if you are a bull on oil, you don't want to buy it when escalation is actually happening. You want to buy it before, if you think that there could be, or if you want to buy some protection. Oil is kind of just right now, I view it as a bit of a hedge to the geopolitics situation. Obviously, we hope for the best in terms of a humanitarian perspective, but if there's any escalation, this is almost a hedge to the market. And that was part of the reason why I was very bullish on oil for most of this year. I still would consider myself bullish on oil. I'm just, watching for a pullback. We'll see how these levels hold. And, again, we'll have to continue to watch global demand from economic data to see how that plays out. But oil's an interesting one right now.
Yeah, I think as long as oil stays above, $77, $78, I think it maintains this bullish posture. It was almost too easy to see this, trend line break and channel, respecting the highs, respecting the lows, getting up here. The bulls kind of took it over, hit some overbought conditions. Truthfully, it's been pretty obedient, because once we hit overbought conditions, we saw a correction almost immediately. So, it obviously can get a little bit sloppier and wilder with geopolitical tensions of what's happening, uncertainty. But as I talked about, for the last year, when we had from negative territory to $130, this to me I call this the tuning fork, which is when you think about if you hit a tuning fork, that like you have all the waves and all of a sudden those waves try to settle down. So I think that's what oil's doing. Is we had that big swing from negative territory to the Russia Ukraine first initial war and conflict, and all of a sudden we're still pretty contained with where oil's kind of range bound. I do think that despite the escalated tensions, Oil between 65 and 95. It's still there's peace out there where we don't have to have war because of oil. And I honestly, like, the fact that the market shrugs this stuff off, I don't know. I mean, this is where it's like the dirty side of trading and investing. It's like, yep, there's stuff going on, but like, guess what we do? We try to make money because of it, which, feels
It
a little
is.
grimy at
Yeah, it
times.
is
But
crazy.
if you like
Just
to
the
trade,
reality
you
of
trade.
what markets are,
I
they're
know.
just forward looking and they're looking at everything. So
Yep,
it's
exactly.
some crazy stuff. Chris, I'm gonna hand over the show here to you for a little bit, let you go solo. Before I step out, let me just remind everybody who's hanging out with us here live. Chris has his own YouTube channel. He also has his own Discord channel. If you guys are looking to get more involved in this sort of stuff, whether it be options, fundamentals, technicals, Chris does a little bit of everything: FX, indices, futures, all sorts of stuff. So if you're not already following him, we're going to drop the link here. Here it is right here. Click this link. Follow Chris on YouTube. You can also find his Discord channel as well there. And Chris, enjoy the show. I'll leave it with you, man.
All right. Thanks, Nick.
See
Thanks
ya.
for having me again. Yep.
Yep.
Thanks. All right, everybody. So I just want to take a quick spot check on Apple. So I did take some shares on Apple. I'll show you right here. If I go into the positions portfolio, I do have a couple hundred shares on Apple for a few accounts, and they're up in profit. I also have some credit spreads that still have to go out to the end of, well, the middle of May. The May 17th expiration is now 23 days out. That's the 160 by 155. We're trading at 168, so those are probably pretty safe to expire for full profit. They've been threatened. These were out of the money bull put spreads on Apple, but these should close up for about, for me, about $100 each. So that'll be $100 on this account, $100 on this account. It's two contracts, so maybe $200. But anyway, I do have some ownership. I took an assignment at 170. Took immediate assignment for like 169 and change. I sold a 167.50 call, which right now would get me called away. You can see right here, maybe the numbers are small, but I mean, I can even read it on the view screen. So anyway, I'll make it larger. If we have any questions, I'll zoom in. But anyway, I like the small print just because I'm at my computer and I've got more real estate to work with. But I've got the 167.50 on both of these. So if it gets called away, it's not till next Friday. But if it's called away, I'm still going to turn some profit for. Trying to think here, what's my break even? I can look at it on Apple. Apple. Let's go. And the fun part about trading equities and options is doing it all by hand on a spreadsheet and keeping track of your break evens. I've got a break even at 165.97. 165.97. So 165.97 minus 167.50. I'll make $1.53 on 200 shares. I'll make 306 by next Friday if it stays above. If we're well above 167.50, I could still roll it. I could roll it another week and probably collect some credit on that. In fact, I might look at that right now while I've got you here and just kind of check the box. I was also looking at some trades. I was telling Frank about this offline. I looked at a trade on Nvidia today, and I'll share that with you if anybody's interested. I'm going to talk about this in my Equities on Demand trading room at the top of the hour. And we've had a good week overall earnings-wise. Spotify, we had a big win. Tesla closed out for some profit today. I've got Meta trades running for tomorrow or for the rest of the week. Meta has earnings tonight after market, so it'll be this afternoon. And then we have Google and Microsoft with aftermarket on Thursday. And then we have mostly energy-focused stocks like Phillips 66, Chevron, and ExxonMobil on Friday. So anyway, let me go into Apple really quickly with let's see, I've got this account and this account. All right, so let me check the positions. So there's my Apple, there's my call. If I try to roll this really quickly, and I'm not going to do it right now, but as of Friday, if we're up to like 169, 170, I could probably roll this, do a quick roll. So if I roll this out a week, I can get another 60 cents and keep the strike the same. Now, what I'm always curious of, if I can roll it and also increase. So right there, check this out. If I roll my 167.50 up to 170, it's a $2.50 roll, as far as I can gain an extra $2.50 of profit, but it's going to charge me and cost me 63 cents. Now, that trade-off isn't all that bad, but the reality is Apple's been beat down all year. I think right now I'm just going to stick with it at 167.50, and I'll make a decision probably Friday or Monday, because if I roll this, if I keep it the same and roll it out a week, I get another 60 cents, which brings my cost basis down. So let's do the math on that. I have to go out another week, but it's not too bad. If I did a 165.97 and I collect another 60 cents credit, that brings me down to 165.37. If I get it lost or get it called away at 167, now I make $2.13 a share instead of $1.50 a share, right? So I mean, week to week, I can maybe play around with this and not be too cute with it, but ultimately the goal is I took the assignment, I'm repairing the trade rather than losing on the credit spread. I'm turning it into like a $200 to $300 profit, which if I make $2.13 a share and 200 shares, I can flip this within a week for $420. Not too bad. So anyway, I'll debate on that with Apple with the ownership that I have. If it drifts lower than 167.50, I know my break even is just below 166, so I can continue to sell some calls and keep my cost basis under control. Let's go back into the charts here. So Apple's off those lows. I think this support, equal lows around October to now is pretty decent. We're roughly 20% off the highs. Apple has been beat up around 18%. And earnings have been solid as they typically are. I think this is just the market just hating it and going into semiconductors, and that's what I took a trade on just this morning. Was we're sitting here in Nvidia. Look, I'm not super bullish on Nvidia, but I do think that I'm giving myself some space where if we have a high, low, if we have some indecision in here, I'm going to be totally fine. This is the trade that I put on. So I did a broken wing butterfly where my sell strike or my pin price is 650. So I'm doing it. It's all with put. So it's a long put butterfly, but I'm doing a skip strike and it looks like this. Okay. So there's my risk. There's my reward. I have credit. All right. So as long as price stays above 650, well, like 640 is my highlight. So if it's above 650, I'm going to keep the credit. I've got about 52 cents credit on this one. I think right now it's trading for about 55 or 60 cents. So if I wanted to, take the trade fresh, it'd actually pay a little bit more. But I'm going in for, a safe play about 4 contracts. So if it makes me money, I make about $200. Also, the pin price, if we're coming within the week of expiration, my max profit's around $2,500. So I can turn a trade that, I expect to make about $200 with the trade. If it is coming in the week of expiration and we're coming in within maybe, $10 to $15, $20 of my strikes, I might see that I can start getting a 52-cent credit to start paying, maybe $1, $1.50, $2 of extra credit, making this thing from a $200 profit to maybe $400 or $500. Maxing out at 250 means by expiration, I'm spot on with the pin price at the day of close. That seldom happens, but there are times where you can turn some of these butterfly trades into some massive profit opportunities. And this trade gets easier if all of a sudden we're talking about semiconductors and Nvidia retesting highs. This trade would be almost full credit well before expiration. But like I had talked about, and Nick and I were sharing in the markets, I do think that with today's candle especially, this is going to be an interesting day to see if we form like an indecision candle on the day. Okay. Bulls can maybe get one more, run to the upside because we have the Mag 7 earnings for aftermarket, today and tomorrow. Or if somehow they're disappointed, which I can't imagine that a Meta, a Microsoft, and a Google are going to have, rough earnings. That being said, who knows? Because price can do whatever it needs to do. But if we have an indecision candle today and if we actually close with a decent amount of red today, that's definitely putting a bit of a contained recovery on this 2 or 3 day rally. One thing I was looking at this morning, if anybody's interested and you want to talk some zero DTE stuff, I was just putting on, I didn't take the trade. I was looking at it hypothetically. If anybody, how many of you out there, trade zero DTE? Like 0 days to expiration, trading intraday, long options, short options. I would say in a given week, I might take 1 to 3, maybe zero DT trades. It depends. It could be an SPX trade. It could be a broken wing butterfly. It could be a long option on the SPY. It could be a credit spread here and there. It just depends. I pick my levels of my days really carefully because it's based on when I think the market's going to actually go somewhere directionally or not. So anyway, here's what I was looking at this morning on the SPY. And, we should have, I mean, it's Wednesday, we're right in the middle of the week, Wednesday, Thursday. I think we're going to have some direction. This might be a better type of trade for tomorrow. But anyway, I'll share what it was today. So price opens up today on the SPY right around 506. Okay. So we're trading right around 506. What I was looking to do was say, okay, if the SPY, which the average trading range on the SPY, by the way, is $6.46. That's a lot of direction, right? That's a lot of direction. So if we were to open up at 506 and go, let's say, 80 to 90% of that movement. Let's just say we get to 90% of the daily trading range. So 90% of a 646 move means that we hypothetically and probability wise should see about $5.50 to $5.80 of direction today. Okay. So at 506, and let's say we get $5 a direction. If I were to, put a long straddle at 506, what's nice about this in a 0DT environment, I know it's 10:30 a.m. right now, but if we still get, I mean, the prices barely move for the day. So if we still get a day's movement, a straddle is only asking $2.60. The reality is if we get a $5 move from some time to the rest of the day, I mean, a $5 move from that puts us up to like 510, 511, right? 510 or 511, which is a $4 to $5 move, or 502 to 501, which is a $4 to $5 move. If I'm only paying 250 or 260 for that debit, and I get a $4 move, I can make profit on that. So I did it this way this morning. I didn't take the trade. I was just looking at it, but this is a really easy way to learn 0DTE. If I took this trade right now, and this is what I would write down, and I kept this, this was 2022 when I was learning 0DTE and trading all this stuff. It was, 2 to 3 months of just intense watching opening bell to closing bell, watching how these option prices change. And you write this down. If I did a 506 straddle where I buy the call and I buy the put at 506, I'm paying $2.60 right now. By the end of the day, what is this trading for? Because if price stays at 506, this is going to trade for 0. Okay. If price goes to 510, this will be trading for at least $4. At least $4, because that's going to be the real value of your call side. If it's down to 502 or 501, again, at least $4 to $5, because that's your real value on the option, right? So I don't know what direction we're going to get today, but if we are getting, $6 a movement, $5.50 a movement, and I'm only having to pay $2.50, $2.60, there's a chance to make some money, right? So let's say that I get price move into 510, we get a $4 move. Well, if I get a $4 move, okay, I pay $2.60 for the debit. I make $1.40 out of a 260 move. Today I can make 53% on my trade. That's pretty good, right? Now, can it get better? Sure. So here's what I looked at doing this morning. If I spread this out and I make this a long strangle, I go to the 507 and the 505. Well, now I pay $1.72 or $1.70. If I still get the $3 to $4 movement, let's say that my 506 goes to 510. Well, this is a $3 credit, right? So if I go from 506 to 510, that puts this up at least $3, which covers the cost of my trade and lets me make some profit. If this goes down to 502, 501, this at least makes $3 to $4 of credit here. So if we get direction, I can cover the cost of my trade. I can still walk away. If I walked away with $3 credit and I paid $1.72 today, I make $1.30 on $1.72. Percentage wise, that's going to be pretty darn good, isn't it? $1.30 divided by $1.70, I make 76% on that investment today, right? Now, does it mean it's a guarantee? No. You can see the probability of profits 43%. Why is that? Because price is going nowhere. We're late enough in the day so far that the expected move is only supposed to go about $2.18 from current direction. Now, why is it so quiet today? Market seems like it's kind of ran out of steam from an aggressive 2-day recovery. And again, we've got Meta this afternoon and after market, we've got Google and Microsoft tomorrow, and we got PCE on Friday. So if the market's going to make a big move one way or the other, it may not be today is the day. So I just think this is interesting stuff to watch. If you want to learn how to trade options, this is the fast crash course to do it. Doesn't mean you have to go and place all these trades, but it means understand these, every trade you take here, especially options, every trade we take in general has risk, has reward, has consequences, good and bad. But what's nice is you can see, all of the time, all of the price sensitivity. Hey,
Yo, what's up?
dude?
I put myself in instead of you by accident. But
that's
now
fine.
it works.
Yeah. What's up, dude?
Not much. I'm not really doing anything today, trades wise. I was in that iron condor with you on Tesla.
Mhm.
You know how that worked out.
Yep.
And then closed my S&P call butterfly spreads and put butterfly spreads this morning.
Okay.
They're pretty much worthless, so got all the premium. And then what else? I'm not really looking at anything right now. I can't really tell. There's not a move happening in the S&P or
Right.
anything really. It honestly kind of looks a little bearish, like the steam has run out.
I agree. I'm going to put this in for my trade alerts. If you can close for $13 or greater, it's worth protecting now. Yeah, let's go to the charts. And this is what Nick and I were talking about earlier. I mean, today's candle is going to be a bit of a tell. And I'm not going to lie, Frank, I would love to see red on the day just because I have trades that with this little recovery, I've got profit sitting down here in the SPX. And with this little pullback, I've got profit sitting right up here on the SPX. So SPX and NDX on both of these, profit. If we stay obviously below this level and above this level, then everything's looking great for me to take some full credit on both of those this week, which is nice because I took these trades last Friday. And if they play out for this week, that just adds to the mix of having some earnings plays, having some short-term volatility plays, and then getting some nice, weekly income for these trades. So I think the hard part would be if we have a sell-off today. I don't think we're necessarily going to take out the lows, right? But a sell-off today that has any type of, let's say a 4 to 5 days or $4 to $5 sell-off, I think it's going to make it more challenging to hit this high by the end of the week. So I don't know, man. I think it's good. I'd like to see the Qs fade a little bit more. I mean, the Qs were coming up to test that floor, which means the NDX was coming up to test that floor, and we're still not there yet. So I need this 17,850 level to still be protected, and a little bit of a sell-off in a gap fill today would actually be great because Qs have not filled any gaps. I mean, gaps on NDX. If this market wants to fill a gap, I would welcome it because that'd be a red candle on the day or red candle by tomorrow.
Yeah. Despite today's move or lack of movement, it's still pushing higher. And I think it might just be this way for the next couple of days because we have Meta after the market today. And then we have, Microsoft and Google after the bell tomorrow.
Yep.
So maybe it's just low volatility during the day, and then we'll get these gaps on open.
It'll be, and that's what also makes trading for a day tricky because sometimes the market movement is all pre and all post. And even though, I mean, the gap today, I mean, let's see the gap between the Qs, because if the Qs had a decent gap, this is another thing we got to consider from, and a lot of this was probably jumping on, earnings in general, but here we are. Let's see here. Futures get a lift from Tesla, Texas Instruments, point to key catalyst boosting rally. So the close yesterday, closed at 425 and opened today at 428. So, I mean, we had a $3 gap. We rallied all the way up to 429. So, I mean, the expected move here is about $7. We had a close yesterday at 425. We had a high today around $4. So is it possible that the high of the day is in? If we hit the average for $7 on the day, is it possible that our $7 is actually from 429 down to 422? If that's the case and we fill the gap, obviously, like I said, for me to have profit running up here and profit sitting down here, I would not mind seeing a bit more of a gap fill today. And then we have, like you said, earnings today with Meta, and that could be a big mover, but Meta is already sitting up there near all-time highs. Not saying that it's going to be good or bad, but Meta could also be just an earnings play that doesn't go anywhere. I mean, if we have a big hit or big miss, I don't see Meta necessarily breaking out of this range. But the nice thing is if it does, I've got some very simple trading going on to this week with some in the money credit spreads. My only risk is with the in the monies, the deep in the monies, that I could get assigned on the losing side, which is fine because I'll just close out the long option and close out the shares. So my max risk here is I collected $8 of credit, which means my max risk is $2. I have very little risk on the trade. So the nice thing is even if I'm dead wrong and price goes absolutely nowhere, I'm only losing $2 on Meta. But if we go, let's say that Meta's trading, down here towards like 435 or 430 or 425. If we have a big miss and we start filling this gap, this $8 credit's probably going to be trading at a $7 or $6 debit, which means I'm making $1 or $2. $1 or $2 net profit. If it blows through expectations and the market's going to get a lift on the coattails of Meta, then we're going to probably have to poke these all-time highs. And my 535 by 530 is right there, at the all-time highs. And same thing, that $8 credit can maybe be trading at, $7 or $6. I look at this the same way I look at any earnings report. You did it this morning on Tesla, right? You made like 50 cents. So just shy of that 10% mark. But if I can make $1 out of an $8 credit, that's a 12.5% keep. I'd like to make 15%, right? 15% out of an $8 move. Actually, I need to multiply that. So if I do 15% out of an $8 move, I'll still make $1.20. If I make 25%, that's even better. 25%, I'll make $2. So I'm happy keeping that. If obviously I can make more than that, even better. But my expiration is out the next Friday. I'm not hanging on to it that long. I'll see what earnings give us. But the nice thing is it's very low risk just doing the deep in the money credit spreads. So that's Meta.
Yeah.
Google, Microsoft. I don't like either of those. Microsoft, I tried to price these in, Frank. I looked at them earlier this week. I tried to price these in for some earnings, like we did yesterday on Tesla. I don't like them. I don't think that the expected move is going to be meaningful. I think that, if I look at how often in the last 10 earnings reports have we seen that the expected move is hit? It's not as high. It's like, 5 out of 10, 6 out of 10, which is right along with the coin flip that sometimes earnings can be. So
in this case, then, instead of looking at an iron condor, you could do something like it. I wouldn't say a condor, but what if you did those broken wing spreads on either side?
well, I mean, you can, but so let's do it. All right. So let's figure this out. Let's try to crank this out in like 10, 15 minutes. Let's use Microsoft. Let's look at the data here. So let's go to the weekly ATR, by the way, because this is two things that I consider, and you're getting a nice little, playbook on how I trade earnings. And if I'm going to take an earnings play, this is typically what I'm calculating. So the market for the week on Microsoft is only averaging about $7.29. All right. So I'm going to type this out. So we've got 7.29 is the weekly average. Okay. The earnings average is, and I'm searching this through Option Slam, 5.34%. So let me go over here and see if any of these numbers really start to sing to us. So 3%, 4%, 5%, 6.7, 7.5, 6.92, 7.19, 6.67, 5.8. Because of these low movers right here, it dragged down my average to 5.34. Which I think is fair because I'd rather see this average than say like, oh, it's going to be a 7 or 6% mover when I've only seen that 3 out of 10 times. So I think the safe play is let's calculate a 5% move or 5.3% move, and then go back to the chart. So if we go 5%, I know I'm going to be talking fast here for the sake of time, but we can obviously take this offline. But a 5% move on a stock that's $409 means this should be a $20 move on earnings. Well, that's way past the average week, right? Like clearly there's some earnings catalysts here. So the average move at 5%, which is still conservative, that's a $20 move. So the earnings average is 20.45. If I do a 5.34, which was the actual percent, that was the average at a 409.20 stock, that's 21.85. So we'll say 21.85. I think it's safe to say, Frank, that if we get a $20 mover, that's what we expect to see. Now, the trick with earnings is we expect to see a $20 move, but what happens if it's a 1.5 to 2 standard deviation move? That's going to blow through your broken wing butterfly if you're trying to position it for exactly the $20 move, right?
Yeah.
So I don't love the iron. I don't love the broken wing butterfly unless I can get it way out of the money and see if. So that's what I want to look at. So let's say right now we're trading at 409. Let's go to Microsoft right here, and I love Russ's comment there. Japan and U.S. will intervene to yen. I don't think they will, Russ. I don't think they will. Not yet. Not yet, man. I don't think the carry trade unravels that quickly. That's just my thoughts. I talked about it yesterday for probably 15 minutes. So, all right, let's go out to, I guess we can play the broken wing. I don't think we're going to credit for it. But if we go out to the 26th, which is Friday, we're talking about these. Microsoft is aftermarket Thursday. That means we have 1 day to manage the trade, right? Aftermarket Thursday, you only have Friday to manage the trade. Right now, my Tasty platform is expecting about a $17 move, $16.50. So we've calculated $20 to $21, which I would say I'd like to go out probably 25. That's a little bit beyond the standard deviation. That's going to be probably a small delta, which should be a high probability. Now, if we're trading at 409, let's just go out 25 bucks. Okay, 409 minus 25 puts me at 384. Okay, and 409 plus 25 puts me at 434. So 384 and 434. Those are the 2 levels I would look at if I wanted a position for this. So if I went out with a call butterfly and we're looking at 434, so I could do a 435. It's still a 13 delta. I could do a broken wing butterfly right there. Here's the good and the bad. I can take the trade, grab a whopping 16 cents credit, and that's it. Like I mean, it's not paying me a lot. My max risk is if it blows through 440 on the upside, I'm risking $200 on the trade. So can I live with that as I'm making 15, 16 cents? So it's $15 if I win for a risk of 234. That's not really that favorable. However, if we get this spot on by Friday's price and we go to this 430 to 432 level and we don't exceed 435, if we creep up into this 435 level, we can still make 260 bucks, and that's the lottery ticket, right? That would be this. You have the credit. Oops, you've got the credit, and then you've got your risk. So if we pushed up into this level and that's your pin price at 435, the chance is you can turn that 17, 18 cents of credit into $2 a credit, $2.50 a credit. Max profit there would be 267. I don't know. So is it a good trade? Well, we're trading what we see, right? I mean, we're going to a 13 delta. I think this might be a somewhat safer way to play it. Go to like the 9 delta and see if this is any better. I don't know, man. For 10 cents, I mean, when you're taking broken wings, Frank, what do you like? You've been sharing a lot of trades with me. I know you've been going out like 1 day expiration versus 0 DTE, but what are you collecting on some of your SPX trades when you're taking them?
They go from 40 to 70 or 80 cents.
Okay, that's fair. And obviously the asset, I mean, you're trading SPX at a $5,000 instrument. This is a $400 stock. So, we can't expect to make the same type of credit, especially if we're going out, to a 10 delta or so. Anyway,
right.
So could I take the trade? Yes. Do I like the trade? It's okay if, and if I'm happy making 10 cents, then it is what it is. I just take the trade, and I could still make a ridiculous amount of money. Now, here's where the bad part is. If Microsoft blows through, let's see where 437 is on the chart. So the all-time high would be 430. If we hit 440, which is where I had some bear call spreads, that's why I had that lineup here. So I can get rid of that now. But I don't want to move that. I'll just remove this. I don't need that. So how about this? I'm gonna transition to, instead of the broken wing butterfly, let me take this from a different angle. Okay. Let's price out my favorite earnings play is a reverse iron condor. We're gonna pay for it, but if we can trade it within the probability move, and let's go back to that dashboard really quickly on earnings. So how many times over the last 10 earnings have we hit at least 5%? Let's find that out first to see, does Microsoft hit the expected move most of the time? And this is where I kind of gauge whether or not I want to trade this. And this is what I did this week, and I didn't like it. So Microsoft here did not reach 5%. Microsoft here, it took 13 days to reach 5%. So I'm going to say that one's a no. This one, it took 8 days to hit 6%. So that does, but you can't have the expiration on Friday. You got to go out another week. Okay. This one does. This one does not. It takes 13 days. I'm not waiting that long. So that one doesn't. This one does right away. This one does right away. This one does 8 days later. That's right on the edge of where I put the expiration. So I'm gonna say that's not good enough. And then this one does, and then this one does it in 3 days. So we have 1, 2, 3, 4, 5, 6 that it hits the expected move of 5+%. Then we have 4 that do not. So it's a 60-40, give or take. So we know there's going to be a catalyst. 5% is going to be that $20 move. So here's how I would consider it if I want to do just a straight up earnings play. Probably going out to the third to buy myself a little bit more time just in case. But if I did, so we're trading at 409 right now. If I did a 410 and a 407, that's a one strike off. That's kind of splitting the difference. It's a long strangle. Look at what it's going to make us pay. And this is what I keep going back to. We calculated a $20+ move in Microsoft, and the market, this is how efficient the option market is asking us to pay $19.75. It's right there. Like it knows based on what the market should be doing, what the IV rank is, what the implied volatility is, that it's going to be about a $20 move. That makes us pay for all of it. Okay. So if we have a $20 move, if I go from 410 to 430 and I sell that, and I go from 407 down to, let's see, or it'd be 387. Yeah, so I have to sell that. Now I can turn what is an expected $20 move. I can take this trade. And honestly, now that I'm seeing this, like I might take the trade, dude. Because if we have a $20 move, this is where price should take us, right? But I'm gonna have to pay $13 in order to get and cap out at a $20 move. Now, this is what I don't love about it. Probability is fairly high, 6 out of 10 times. It could be better, but if this trade is sloppy and sideways, I'm risking way more than what I can make on the trade. That's what I don't love. So in a way, if I'm willing to pay just a couple dollars more, maybe I can go from 407 down to 382 and give me a $25 downside, and they'll go from 410 to 435 and give me a $25 upside. Now, if I get a big move one way or the other, I can make a little bit more profit on the trade. I give my call or my sell side a little bit more room to run. That's why Tesla hurt us this morning, Frank, because the sell side of those options, they immediately got into the money, and the values changed where all of a sudden what we collected on that sell call, for example, is now way upside down. And so sometimes when the premium shifts that aggressively, we don't get what we want as far as maxing out our profit. So long story short, this is pretty much what Microsoft would look like. You got to pay $15 to try to make 20. That's probably what this is a debit. Yep. So I do a $15 debit with the expected move of making about a $20 credit. So I walk away. If I pay 15, I make 20, I net $5. Now a $5 credit out of a $15 position is not bad. That's 33%, right? So if I make $5, I pay $15, I make 33% on the position. That's a good earnings play. It's safe. It's probable. I think that can happen by Friday of this week. I think that could happen over the weekend if we have some movement. But do I want to pay that on a Thursday or Friday after I've had a good move with Spotify making $10 and making a couple bucks on Tesla, making money on the SPX, the NDX? Probably not. I'm just going to say, I don't need to overtrade. So I'm not going to. So as far as the debit, I probably won't take that trade. Now, here's another way to trade it, and this is what I did on Meta. It's a deep in the money credit spread. All right. So we expected a $20 move. Okay. We expected a $20 move. And 410 to 4, if we did the 430 by 427.50, what? Oh, that's the call side. Never mind. This needs to be the put side. 430 by 427.50. Aha. So we could do this here, Frank. If I did a 430 by 427.50, if we tested the all-time highs again, we can get $1.85 out of a 250 strike or spread. $1.85 divided by 250, I'm getting about 74% of the premium. So instead of having a big risk on the trade, I have a small risk on the trade, which means if I'm right, I make $1.88. If I'm wrong, I'm risking $62. Okay, what do we need it to do?
You're
We need
doing
it to move.
a bear put vertical.
Bear put vertical. Well, I would.
You're above price and you're selling a
This is a
call.
bull
Or,
put, dude. This is a bull put spread. This is in the money bull put spread.
okay, so you're buying a put at 4. Does that say 430?
I'm selling at 430 and I'm buying at 427. So it'd be like this. Price is here at 409. What I'm doing is I'm going all the way up to 430 and I'm selling my put and I'm buying my put. So it's a credit spread, but it's deep, deep, deep in the money, which is why I'm collecting way more credit than what I'm risking. Does that make sense?
Right. So
So
what would this turn into if you hit full credit? That would be you're paying $2 now.
no. This is a credit, dude. I'm keeping the $2.
You're keeping it.
Yeah, this is a
I thought it
credit
was a
spread.
debit.
This is a credit spread. If you
Okay.
sell the 430 and buy the 427, that's a credit spread.
You're going out to May 3rd.
Yep.
Okay, 205.
Yeah, you should see about 205 credit, which for a 250 spread, well, you can see some fluctuation there. But I'd say this: if I took the trade, this is what I would do. We're on the edge of the expected move, right? And again, there's no guarantee this is going to win because I'm going way in the money, and this may not work. But if I'm going to get $2 of credit, okay, and I'm going to risk 50 cents, that to me, risk parameters wise, that's a great trade because if price goes up to hit the all-time highs at 430, guess what happens? This trade is probably going to be worth, instead of collecting $2 on it, the day earnings comes out, maybe it's trading for, I don't know, $1.50, $1 debit. And so I collect the $2 up front, and maybe it's trading for $1.50 to $1. I can still grab that 50 cents to $1. But on the other side, I'm risking, if I did the opposite trade here, I'm risking the same type of thing where I'm going to risk another $50. So ideally, if I'm risking 50, as long as I can walk away with this as a, let's say like a 50-cent debit. If I did a 50-cent debit, let me put this together. So if I do the 430 by 427.50, that's a deep in the money bull put spread. If I do the same type of thing with a $20 move expected here, that'd be 390. I'll do the bear call spread. So
Is
I'll
that just
sell.
basically a condor?
No, it's not a condor because a condor you want to contain price. We want price to go up. We want price to go down. A condor, you want price to stay in the middle. You want it to go
Well,
nowhere.
I mean like a reverse condor, like an iron condor. You want it to go out. It's kind of the same shape.
Sure. Well, here, let's price it. What it's going to look like is this. You're going to see very little risk, and you're going to see like it's going to be this huge profit potential, but it's going to be a wide. I want to say it's going to look like. I'll show you. I'll just build it. I'll build it, and then.
It's as in like this is going to be less expensive than doing a
Way less
iron
expensive.
condor trade.
Yeah, way less
Okay.
expensive. Yep. So let's put this in Microsoft. Okay, Microsoft here. Edit the spread. Let me put on. So if I go out to the 3rd, okay, and we're gonna sell by. So I'll put the puts will be the deep in the money one. So that's going to be the 430 by 427.50. Okay, and then on the call side, I think it was 390. If I sell the 390 and I buy the 392.50 there. So now I have a deep in the money call spread and I have a deep in the money put spread, both credits. That's what it looks like. So as far as my risk, I mean, I have risk if price doesn't get to 392 or doesn't get to 427. I don't get paid on this trade. But my max risk is, if I'm collecting 380 to 370, or let's just say I'm collecting 380, what's my risk on the trade? My max risk is $5 and I'm collecting 380. So I'm only risking $1.20, So this is what it looks like, where if price goes outside here, I'm at max profit pretty quickly. If it goes here, I'm at max profit pretty quickly. But there's obviously a wide dead zone where if price doesn't go anywhere, that's why I'm taking the small risk. If price doesn't go anywhere, I am taking that risk. But that risk is a third, or it's like 25% of the trade instead of being 50-50. Does that make sense?
What's the odds? Like, what's stopping them from assigning you at, or I guess closing the trade for
That's a
you?
great question. That's what happens on these trades. Last week, I got assigned on TSM for the losing side of the trade. So I did this exact same thing in TSM, Taiwan Semiconductors. And when the market, I can't remember if it went down or up. I guess I should remember that, but it didn't matter because I think the price went down on TSM. And so price went down, which means that my deep in the money call spread paid profit. Okay. And my put spread was assigned. So it was assigned, but here's what happened. I took the trade for 71 cents credit, 71 cents credit. So I got assigned, my broker assigned me, and exercised my long option and closed out my shares for a 30-cent loss. So with the commissions and everything, I still netted a 30-cent loss, and here I kept the 70 cents. Now I netted on this one, I actually closed it out for a net like 64 cents. Instead, I didn't wait to expiration, but I was up 64 cents here, and I lost 30 cents here. I took the trade. I still netted 34 cents credit. So the same thing would apply here. If I was assigned and then I win on the trade, as long as I can make more than $1.25 in net profit, I'm still making money on the trade, and I've got potentially up to $4 of credit. That makes sense?
Okay. Yeah.
Yeah. So you're right. It can happen with the assignment, and obviously with a smaller account, if you can't afford to take 100 shares of Microsoft, which most people aren't trading with $40,000 or not going to put $40,000 towards a share, I get it. But the nice thing is you can still take the trade. The broker is going to automatically exercise the long option and the shares, close them out. It's going to be the initial trade that you took on the credit spread. It's still a defined risk trade. Period.
Yeah, I mean, you wouldn't get assigned the shares in that spread. They would just close you out for,
Correct.
like you said,
Yep.
30-cent loss or something.
Correct. So now that I see this, I mean, notice how the mid price I'm seeing, like, let me see what this is in Tasty right now. Dude, this is crazy. If I get filled on this, Frank, I'm going to take this trade, dude. This is kind of ridiculous. If I can take the trade here at 440, see if I can take this. That's such a small risk. It's like crazy. I'm going to see if I can take this trade. So 440 not filling. Let me try to get like a 445. Let me try to get 440. That's such a small risk. Now the mid's 432. Replace. I'll try to get like a 425, maybe a 415. I mean, honestly, $4, dude. I'll take the trade for $4. $4. Let me see if I can get it filled. Nope. Now it's back to 3. All right. It's just slippery. Anyway, all right. I'm gonna cancel that. But a couple of different ways to trade. Like, that's dirt cheap to take that trade. Is it a high probability trade? I mean, in the sense that we have earnings and Microsoft should move $20, I think that $4 credit could probably pay us $1 or $2. So and again, there's ways to do it, right? We can obviously pay, $15 for the debit for a probability of making 20, which is fine, but not everybody can pay $15 and risk $1,500. I can pay nothing, collect all these credits, and have the risk of $1 to make 4. And the reality is I'll probably walk away with maybe $1 or $2 net profit if I don't want to wait to expiration. So anyway, the nice thing is there's like typically 3 or 4 ways that I like to trade earnings, but you got a nice little kind of walkthrough on what I would do. But so why am I not taking the trade right now? Well, if I took Microsoft at $4, I would have taken the trade. I tried to get filled. It's not taking, so I'll wait. I'll reassess this. This is tomorrow after market, by the way, so I can still kind of reprice this all tomorrow. The one thing I'm also considering for the week is we've already made a move. So 395 to 411. We've already moved $15, $16 on the week with the expected range of 20, right? I expect price for the week, even with an earnings catalyst, to only go $20. We've already moved 15 this week, dude. So that means that even with an earnings print, this thing might only go another $5 higher. Unless it misses to the downside for another $5 lower, this might not go much higher. And, if I did that with the kind of equidistant spreads, I need this thing to get to 430, or I need this thing to just drop all the way to 390. It might not do that by next week, or at
But
least
are
by
those calculations where it says how much it moves, isn't that post earnings? So any movement before doesn't really matter, correct?
But it does, because if you consider, I mean, think about the weekly averages, right? If I go to, actually, I was wrong on the weekly average. This is the daily. I need to change this to a weekly. I was going to say that seems really small. The daily average, weekly average. Here you go. So the weekly average is $17. The reason it matters is my favorite way to trade an option is if price has already moved $10 and we have an earnings catalyst. This is considered, to me, this has already moved $10. The expected move for the week, look, this is still averaging with a 14 period look back. This is still averaging in with earnings plays, right? So that being said, if this is my favorite way to see a stock, if the stock for the week has gone virtually nowhere, I feel like if I'm positioning on earnings with a very small move for the week already, that's an easier way to price the option. If price has already made a $10 to $15 move, and I'm then trying to say, well, this is an earnings play, we're going to go another $20. That's way outside the average. Way outside the average. You're telling me that we're going to see a $35 to $40 move on Microsoft for the week? Obviously, it can happen, but I don't like to force positions when the better trade would have been, had I positioned neutral as soon as we open on Monday. As soon as we open on Monday right here, that would have been a better trade. Right there would have been a better trade. To take this walkthrough, do this on Monday as soon as the market opens, because you're probably already break even or better, or maybe even profitable before the earnings print even happens tomorrow. But because we've already made a move, now we're like, well, it's already moved $15, $16. Can earnings push it another, $20? That's probably not going to happen, right?
Yeah, that's
So
true. I mean, last week was like a 30-point move for the week.
it was, but also what happened last week as well? It was a massive sell-off. I mean, so
Right.
it was like a high volatility sell-off week where, like, the VIX is up to 18, 19, 20. And the VIX, came back immediately from Friday last week. But I mean, we had that big spike up there towards 2150. Everything was elongated. Look at the Qs. Oops, there's not 4 of them. But the big fat sell-off for the week where this was double the average, right? This is the average week is 1397, and last week's move on the Qs, $26. So I mean, we nearly had a 2x or 2 standard deviation move, which is out of the norm, right? It does happen, but it's just so infrequent. So that's why the outlier last week was, yeah, everything sold off a ton, Microsoft included, indexes included. So anyway, just talking shop. And I mean, if I were to take the trade on a Monday, I think I'd be better off for it, because there's less, the market's already moved $15, $16. That being said, I can still take the trade we just talked about, as in it's cheap. If I got filled for $4 credit, I'm comfortable risking $1, right? What I don't want to do is pay $15 and then have to, hopefully grab 5 or 10, right? It's like, as we did, I did it on Tesla, dude. I paid 1070 to make 13, and I based on the call side, it's like if I put the long call out of the way, or the sell call out of the way, it would have been trading for $14, $15 as opposed to 13. So, but I played it how I expected to calculate the move out. I was trying to be conservative, and I still got paid. It's fine. But anyway, that's all.
What about doing your idea earlier? You're talking about doing these what do you call it? Spreads that were similar to condors, except you have puts above price, calls below price. What if you just flipped it around? And now you're selling puts and buying puts below price. I'm looking at like what do we have? 380, 390.
If you have the $20 move, that'd be a 390. So if you wanted me to do a bull put spread, so I do a 390 by 387, it's a 250 spread. I get 50 cents on that. And then the bear call spread, this is an iron condor that you're talking about. If I did the 430, I sell the 430, buy the 432. Now, I can collect $1, and if price stays within that expected move, I keep the $1, but I'm risking because they're 250 spreads, I'm risking a little bit more, right?
No, you
So
want it to move out. So say
no,
you do
not in this example. If I'm doing well, so I'm not doing credit spreads then. Are you talking about doing debit spreads? Cheap debit spreads?
yes.
Yes. Okay, you're talking about cheap debit spreads. Okay. Yes, I know what you're talking about. So you'd be doing a bull call spread, but doing it in the money. Or, I'm sorry,
Right.
out of the money. It'd be an out of the money bull call and
Yeah,
an out of the
below
money
price.
bear put. Yeah.
So it is cheap, but
It's
I'm
cheaper
thinking, so if
for
you're
sure.
getting like 387, you sell a put, 390, you buy a put. Right now it's at like 50 cents. So that's your debit.
Let's do this. How about this?
And above at 425 to 430 or something, or
Yep.
427.5 was like
Yep.
a 20 to 30 cent. So that's 80 cents total, which I guess would not be, that would be more expensive than what you were talking about, but
Well,
less risk of
this
just
is a
getting a
debit spread,
spike.
but it's a very inexpensive debit spread. Instead of doing stuff at the money. Now, by the what expiration you talking about? Because you said 80 cents. Is that a
May
426
3rd.
expiration? Oh, that how are you getting it that cheap, dude? I've got
So
the debits at
three,
like 250.
so May 3rd, if I'm buying a put at 390 and I'm selling a put at
Okay.
387 and a
I
half,
gotcha. I gotcha. Okay. Yeah, that's
I'm
fine.
looking at
So
52 cents.
you're buying a 390, selling a 387.50. I've got $1.73. Hang on. This one. So do this one. There you go. Right. So 427.50 to 430, and then
4,
390 by 387.50. Is that fair?
yeah,
Yeah. So you're right. Yeah,
it's like
it's
50
going to
cents
cost you
each.
$1. It's going to cost you $1 to make. If you're right on this trade, you can make a $1.43 max profit. Now, what you need on this one is if price blows through my highs or blows through my lows, then you're going to make that $1.43 pretty quickly. But you probably have to wait for the weekend. You probably, I mean, that's the tough part about these values changing so quickly. We go from a 22 delta to a 40-50 delta. That sell call and that sell put are going to change, where I probably won't keep more than $1.25 or $1.40 on the trade. So if I did this trade, Frank, this is probably what I would do. I probably do something like this. If I did the 425 by 430 and then the 395 by 390. So I could pay $250 on the debit to collect $5, which would still net me about the same thing. I don't know. That's you're right. That's a cheap way to play it. Cheap way to play it.
But
That's two very inexpensive. Those are out of the money debit spreads. So look, let's recap this. Then I gotta jump to my other trading room here. So we looked at earnings plays. Most important thing to remember for earnings plays is it's a coin flip, right? There, I mean, I try to give myself a little probability, and I try to look and see what the price has done. I try to price it fair, right? The challenge is pricing it fairly, and I say price it fairly because I don't want to feel like I'm overpaying for an option, and I want to feel like what I am paying for has a high probability of paying me. If I don't have that, then why would I take that trade? That's literally just a coin flip. So we have the long straddle, we have the long strangle, we have the reverse iron condor. We talked about deep in the money credit spreads. We also talked about deep out of the money debit spreads. There's a lot of ways to trade it. We looked at the broken wing butterflies. I mean, pick your poison, but there's going to be risk reward. It's just, do you know what the trade has to do? If I take any of those trades, I know what Microsoft has to do after earnings for me to make money. What trade is probably the cheapest? Cheapest trade is going to be the deep in the money credit spread, because I'm collecting money up front. And if price goes my way, yes, there's a risk of assignment, but the one losing side that is taking care for a small risk, the winning side hopefully pays for it really easily. The deep out of the money debit spreads, like we just talked about there, that's a very inexpensive way to do it. I have done that before. And the good thing would be if I went out to the 426 expiration, this would almost be in full profit immediately because it's aftermarket Thursday. This will be opening on Friday. If we blow through this high or blow through that low, it's going to be in profit almost immediately, which is good. The problem with the 5-3 expiration is you got to wait that extra time to let all the decay get sucked out of the sell side. That's the only downside. The broken wing butterflies, you got the lottery ticket in there, but you don't get a lot of credit up front. You're getting, 15 cents, 10 cents, and that's just not good enough for the trade up front. So I'd say no bueno. Long straddle, long strangle are expensive. These two are a little bit more creative, but you got to know the pros and cons with possibly an assignment risk or knowing that there's going to be a little bit of time decay that you got to get through. Yeah.
Okay.
So
yeah, it's tricky. I guess for Microsoft at least, they're not pricing in a move. If it's so cheap to do those spreads, then they're not counting on it moving anywhere.
Well, I mean, we're going to get a move. It's like it's just efficient. I mean, if you're going out of the money, I mean, it's just because you're trading a 25 delta. It shouldn't be expensive to trade, a debit spread out of the money. But what I'm saying is this: if you just look at the chart, here's why I think that it's going to be a tough trade. Okay, I know it's Mag 7, but how easy would it be for the market to stay where it is and have Microsoft not break the highs and not break the lows? Right. And so then and in hindsight, it's always easier. But in hindsight, you're like, well, if that's what Microsoft's going to do, then just do an iron condor and just collect your credit. Well, we saw this earlier. You're going to collect $1 to risk about $1.50, right? Because we're doing 250 spreads. It's like that trade's totally fine. But in the event that Microsoft has a big earnings one way or the other, you lose, And so like, again, dude, I don't know what it's going to do. I'm just trying to see what I could price in to be paid with the highest probability. And I think that this, we had gangbuster earnings in the right environment, like sentiment was super bullish, and now things have kind of taken a break. So I could see price also doing the same thing and kind of calming down. And, what is it about Microsoft going into Q1 earnings that would be great? Unless they come out swinging like it's all AI and the market gets all hyped again. But if it's just like, yeah, we hit the expectation and I just don't know. So I think the safe play, because this is a Thursday, Friday, I've already made good profits this week. I'm probably going to pass because at the end of the day, options or just trading earnings in general, it's a coin flip. So I'd rather keep the money, preserve the capital, not take the risk. But if I do take the risk, it's going to be super, super small. So How about this? You and I can talk offline. I might look. So we're staying around 409 today. I might look at that same in the money credit spread where I can get, maybe $3.75 to $4, take a very small risk, see if I can close that thing out for like 50 to $100 net profit. If I do, fantastic. So if I take that trade, I'll let you know.
And if not, no sweat. It's cheap.
No sweat. Yeah. If I can't get filled where I want to get filled, no big deal. So I probably won't take less than $4. If I'm willing to go that deep in the money, I want to try to get like, $3.85, $3.95, $4, which makes that trade super, super low risk.
Gotcha.
So, cool, dude. All right, man, I'm going to jump. I got to jump into my trading room. I'm already 23 minutes late. So anyone watching that's in my Equities on Demand trading room, I apologize for going long here. Don, I see you and everyone else. So anyway, thanks for being here today. Frank, thanks for jumping in, man. Pleasant.
Sure. Appreciate the conversation.
All right, dude. I'll talk to you later. Thanks.
See you.
Bye.
Real quick, I wanted to throw a shout out to our stream sponsor here on the A1 Trading Show, Forex VPS. If you haven't heard of Forex VPS before, they are a dedicated hosting platform where traders, especially algorithmic traders, can set up an in-the-cloud computer to run their MT4 24/7. If you have any experience trading with robots on MetaTrader 4 using expert advisors, they have to remain up all the time, and keeping your computer on is not always practical if you have like a power outage or that sort of thing. And with Forex VPS, you can set up a dedicated hosted computer in the cloud to host your MT4 or 5 platform. They have the fastest execution in the industry with latency less than 1 millisecond, which means when you place trades or your system places trades, it's near instant. So I've got my VPS open here from Forex VPS, and you can see, I just want to show how quick the latency is here. So if I click sell, you can see it is right away. I'm in the trade, all set, as if I was sitting on this computer computer, even though it's somewhere in the cloud. For stream viewers right now, Forex VPS is offering 30% off of your final subscription. If you're interested in giving it a shot, there's no risk. Why not? Use the link down below and the promo code there, A1Trading30, for 30% off. If you're watching this stream at a later time, you can also find it linked in the description below.
Don't go anywhere. Coming up next, we're talking more stocks and adding to the A1 Trading Community Portfolio Live. Remember, if you're looking to start your own stock portfolio for long-term investing, you can get free stock shares just for signing up with our partner broker WeBull. We'll drop the link in the chat now, or you can find it in the description down below. If you're not in the US or the UK, don't worry. You can still buy and sell stock CFDs with Eightcap, which is also linked below. Now, let's add to the portfolio. All right, everybody, we are back. We are still going here today, and we're going to do a little bit of the stock portfolio here today. And I got some exciting news too. If you look up here, see if I can zoom in. I don't think I can, but if you look right here, actually, you'll see that our open P&L, our open profit and loss, finally, for the first time, we are in profit with the portfolio. So we finally did it. It's earnings season. All these big company earnings are coming in. Some good, some bad. But if it's good, like yesterday, we had Tesla that ended up being a pretty good, pretty big hit for us. We also had Lockheed Martin had earnings as well. That was also positive for us. So lots of stuff going on, and it's the perfect time to talk stocks. So we're going to do this for a little bit. If you are completely unfamiliar with what we're doing here right now, I'm going to explain it really quickly. So this is our A1 Trading Community stock portfolio. And when I say community, I mean you get to pick and choose what we buy. We're going to take a look at a few different things. I have a few different categories for us today. And then we are going to put a poll in our Telegram, which is completely free to join. If you click the link that's going to get dropped in the chat, completely free to join the Telegram, and you will actually get to vote on what we add to the portfolio. All right, so let's go ahead and just jump right in. And what do we want to start with today? How about we start with this? So let's take a look at what companies have their earnings today. So I'm going to share this with you guys. So here's our earnings calendar. And if we take a look at yesterday, we had some big companies like Visa, Tesla, Pepsi, GE, Texas Instruments, so on and so forth. Big companies showing off their earnings. This was yesterday, so here's today. So today we have Meta. That's going to be massive. IBM, AT&T, Boeing, Chipotle, all kinds of stuff. Ford is having their earnings. Humana, Biogen. So lots and lots of companies having earnings today. The list goes on and on too. Pages of this stuff. But these are the biggest ones. They show the biggest market cap first. So Meta has the most market cap. So they're at the top, followed by Thermo Fisher, IBM, ServiceNow, AT&T. That's our top 5 when it comes to earnings today. So I thought that it would be interesting because this could either go really poorly for us, or it could go, well, we're buying partial shares. We're buying small partial shares. So either way, it won't have too much of a crazy impact. But I thought it would be fun if we bought shares of a company that's having their earnings later on today. So I'm going to send this to Chandler. This is going to be our first poll of the day. So a reminder, one more time. If you join our Telegram, which is completely free to join, you can actually vote in the polls to decide what stock we're going to buy. I'll show you what that looks like. We haven't done this in a couple days. It's been like a week, about a week since we've done this. But yeah, you can see like here. So
You guys voted. We bought Bitcoin ETF, 361 votes. You guys voted, and we bought Tesla. This one was really close, really, really close. 25% of people said Google, including myself. 29% Tesla, 19% JP Morgan, 27% Apple. So yeah, we literally just drop polls in here. You guys vote. And here's our first one. So all 4 of these companies have earnings today. IBM, AT&T, Waste Management, and Humana. And I would suggest that before you vote, you wait until we take a look at the stocks. That's what we're going to do right now. And in fact, I already have Humana pulled up. So here's what the daily chart looks like for Humana. Big, big, big downtrend. Big downtrend all end of last year, October of last year to today. This thing has been falling big time. But if we scroll back, we can see some slow, steady growth, some periods quicker than others, but overall growth, and we're way off the highs at $564, trading at $300 right now, which analysts say is a good price to get in at, right? This analyst target price here says that $326 would be considered a cheap entry point in getting in Humana, below the cheap entry point. It dipped big time today. Did their earnings, I wonder if their earnings already came out. I know that they kind of come out sporadically throughout the day. I wonder if I can actually check and see. No, I'm not sure if they came out, but that would explain that big red candle if it was not good earnings report. Was this their earnings? A loss of not 1 billion, was that 350 million? Is that a operating income loss of $350 million? Is that why this is so low? Ooh, yikes. Net income Q4 2023. That's a B, so that has to be $520 million loss, net income loss. Oh my goodness. I wonder if their earnings did come in and that's why this thing is trading so low. Analysts say, based on 23 analysts, they say buy, and it is coming in at a lower target price than normal. But, you know, I don't know. This thing has been in such a crazy downtrend for so long. But if it does kind of level out here, because we're kind of bottoming out in a familiar place right here. No, actually, we're trading lower than that. I take that back. We've broken through those lows on a technical standpoint, broken through those lows. So if this thing does turn around and starts moving back towards the highs, you know, slowly, steadily, we're talking investing here, not day trading or anything like that. This is long-term investing. That would be really nice return profit. But anyway, so this is Humana. I think their earnings may have already come out, and this is why we're seeing such a crazy big move. The other one, I've actually got all 4 of them right here. The next one we're taking a look at, Waste Management. If you're a golf fan, then you're familiar with Waste Management because that's the most fun tournament every year. But look at this thing. If I go to the weekly chart, look at that nice, beautiful chart here for Waste Management. Slow, steady growth, and then like everything else, dips and then just explodes. And it ranged for like 2 years. You can see 2021, it just kind of had these peaks and valleys, up and down, low, slow growth, but kind of a range, and then just absolutely exploded recently. But had a bit of a pullback. It would have been nice if we could get in here. It has almost got, it's gotten back like a third of what it lost in that pullback. but still slightly below average price according to the analyst target. Not quite at the low price, but slightly below average price. Again, based on 22 analysts, they're either saying strong buy, or hold. And then if we look at the financials, last year was good. Their most recent earnings report, net income report, not great. Total revenue up each year. That's good. And operating income, same thing. So that is good. News, nothing about earnings. And again, their earnings are coming out later today. So if their earnings are positive, then that would be very positive for us. These are the two most expensive out of the four, though. Humana trading at $310 a share, Waste Management trading at $209 a share. And then we have AT&T has their earnings today. AT&T, big fall off for AT&T. Looking at a weekly chart, this thing dating all the way back to 1984. I'm surprised that this doesn't trade higher than it does. This thing is constantly up and down, but right now it's more down than up, right? So we have potential to, this is probably one just based on the history of it, because you can see this thing constantly goes up and down, and right now it's down. So this is probably something that I would look to get into and hold it until you're kind of in this range here and then sell it before it goes back down again. It's probably how I would play this. Based on 27 analysts, it looks very similar to the last two. A couple strong buys. Most people just say hold, but also trading below average price right now. This is the first time that we've seen someone say that it's underperforming, though, which is interesting. So AT&T, and then lastly, IBM. I got a question about IBM. What is it? I feel like you see IBM everywhere. That logo is just on things, and I feel like they're just like Big Brother watching. So I don't even know what they do. Can you advise the platform you're using? Yes. Oh, I should mention that. So this is WeBull. WeBull is one of our partners. You can find them down in the description below. And it is a super awesome brokerage that you can buy and sell stocks on. That's what we're using for our A1 trading stock portfolio here. You can see that we have partial shares of all of these different companies. We also have cool stuff like we have gold and a Bitcoin ETF. So you can trade more than just stocks stuff. But here's IBM recently in a downtrend. Today, though, a little bit of a gap, and it's kind of not moving at all, just kind of waiting for those earnings to come in. But overall, nice steady growth. This thing ranged for like 10 years, though, like 2012 to 2023. Just nothing but up and down movement until it finally broke through. Really nice uptrend, pulling back just a little bit, but now's the time to get in. Below average price, just slightly. Analysts, of course, say buy. Looking at the financials, positive year over year, every quarter. Total revenue recently has been positive, and even when they're in the negative, just by a little bit. The last 2 quarters have been very positive. And the 2 quarters that they had that were negative, I mean, that's basically just break even. Operating income positive as well. So there we go. Those are our 4 options. Again, all 4 have earnings coming out today, although I suspect Humana's earnings have already come out. So Waste Management, AT&T, IBM, Humana. Let's check on the poll. 36 votes right now. My vote is for IBM. And you guys agree with me. Awesome. Awesome. Let's pick up some IBM. So we are going to do a market order for $20. And we're going to go ahead and buy this right now. There we go. We have added $20 of IBM into the portfolio. Next up on the list, this got me thinking about it yesterday because they had earnings. We have a bank in here. We do own JP Morgan. We own him. We don't have a credit card company. I saw that Visa was having their earnings. Visa had their earnings yesterday. Gapped up big time higher today. Probably had, my guess is the market were closed when the earnings came out. When the markets opened, this thing gapped way higher based off of positive earnings. And then since then has given back some of those gains. Not all of them. Still a bit of a gap here, but has given back some of those gains. So here's Visa trading at $275 a share. And if we're going to look at the technicals here, just nothing but slow, steady growth. Slow, steady growth. Bit of a downturn like most stocks in early 2020s, coronavirus days. But since then has rebounded very, very nicely. And like most stocks recently, in a bit of a pullback. Trading close to low price target, certainly below average. If we take a look at the financials, net income each quarter positive, net revenue each quarter positive, operating income each quarter positive. I love seeing this green here because that hopefully means that we'll see green in the trading count as well. So, let me send this to Chandler so that he can. Here's our next list. So Visa is one option. Another option is American Express. AXP, American Express. In their chart, looks pretty similar to Visa's. Not quite the same steady growth, but nonetheless, since the 2000s at least, has certainly continued to grow higher just about every year, excluding the coronavirus days. This one, however, not in a downtrend. If anything, this thing has been jetting higher recently, broke through what looks like all-time highs, at least all-time highs for the last 24 years. So this thing most likely is going to be due for a pullback. So this could be tough. In fact, this is trading above average price right now. So as good as it looks on paper, it could absolutely be due for a pullback. Financials look good. Financials look very good. Could continue to run. Definitely could continue to run. But I'm assuming that it's going to be due for a pullback here fairly soon. But you know what? If it doesn't pull back too far, if it just kind of pulls back to these highs here, bounces off of them and then continues to trade higher, that would be just fine. That would be just fine. So there's American Express. And our third and final for this one, we are looking at MasterCard. So here is MasterCard, the most expensive out of the three. And theirs really does look just like Visa. All three of these card companies look very, very similar. A deeper pullback than Visa, maybe, but also trading much higher. Analysts say buy. They don't even say hold. Oh, this is interesting. This is really interesting, actually, because the majority of these, oh, they like American Express too. Oh, this is very interesting. Most of the stocks that I look at, the analyst ratings, a lot of the time say buy and hold pretty evenly, which to me, if you're going to hold it or buy it, if you're not in it, then buy it and then hold it, right? But these are really saying buy. And in fact, MasterCard is below average price. American Express is above average price, but Visa is also below average price. Analyst ratings on all of these are buy, and I'm sure the financials look good as well. Yes, they do. Although those percentages aren't quite as big as American Express. Interesting. All three of these seem like good options. But I will remind you, since we're only buying partial shares of this stuff, the problem with buying $20 worth of American Express right now, trading at $239 a share, and buying $20 of MasterCard, trading at $462 a share, basically your money's going to go twice as far with American Express than it is MasterCard. So the next poll is up. 24 votes in so far, 25. Which one? Man, I'm torn. I really am. I think all three of them are great options. It's tough buying partial stocks of things that are so expensive because I want to see the account grow. And I think that it just takes longer when you buy such expensive stocks. Not that these are cheap by any means. $230 a share is not necessarily cheap. Visa, American Express. I wish that American Express was in the same pullback that Visa is. Then I would definitely say American Express. And to be quite honest, I think I might still be leaning towards American Express because I do expect it to pull back. This is just such a wild move here, especially this giant green candle here. I wonder if that was their earnings day. But it might not. It might continue to move much higher and then pull back at some point. But it's not up to me. That's the beauty of this show. This is the community stock portfolio, not James's stock portfolio. So let's see what you guys say. I'm voting Amex. And you guys are voting Visa. That is fine with me. Visa. Market order. Amount. $20. Market order. Buy Visa. Buy Visa. There we go. And we are in Visa. All right. And I got one more for you. Which of the do we own Netflix? I don't think we do. Apple, Nvidia, Nike, Walmart, Lockheed, JP Morgan, Coke, OGN, Gold, Meta, Bitcoin, Tesla, Google, McDonald's, Home Depot, Toyota, IBM, and Visa. So our last little category of the day, and I don't know, actually. There you go. I just sent that over to Chandler so you can put the poll in. I feel like I know what everybody's going to choose. I feel like I know what everyone's going to choose, but I could be wrong. We are looking at entertainment companies, media companies, starting with WBD, Warner Bros. Warner Bros. Discovery. Very cheap stock. $8.28 a share right now. This thing has not looked good. Warner Bros. Discovery. I'm surprised that this is only on the market since 2022. But ever since 2022, this thing has fallen. However, we're trading below average price. We're pretty much trading at low price. And the financials the past 3 quarters have been really positive. Total revenue, last quarter, not great, but the quarters before that, good. Operating income, good. Financials say buy or hold. This could be a good opportunity to buy multiple shares because we could buy 2.5 shares essentially of this and hold them for a very long time and make a really nice profit off this because of how cheap it is right now. So that's the argument for Warner Brothers. Next up on the list, we also have DIS. Now, I have a lot of thoughts on Disney. However, as much as I dislike this company, they are not going anywhere anytime soon and will continue to try and take over the world and everything in it. I believe that. Not to mention, their stock is trading way off of all-time highs. We're almost $100 a share off of these all-time highs, which is a great discount. Trading at below average price right now. And like I said, I have no doubt in my mind that at some point, I don't know when, but at some point, we will go back up to these highs and we will pass them. We are already on our way. Analysts say buy Disney right now. Financials, they're still making money. Always going to be making money for Disney. So, and even in this most recent uptrend, it has pulled back a bit. Like a lot of stocks have been pulling back recently. So we've started the official Disney rebound uptrend, I think. And we pulled back from those highs. So this could be a great time to get in. I think it is a great time to get in, actually, as much as I hate to say it. So there's Disney. After that, whoops, what is it? It's NFLX. There it is. Netflix. Netflix is expensive. $554 a share. This is what the chart looks like. All-time highs trading at $700 a share. This thing boomed in 2018. Really more like 2019. Boomed. Did fantastic during the pandemic. And then people are like, hey, we can go outside again. Right at the same time that Netflix was like, hey, You know how everyone watches our content because you share passwords with each other? And even though you're sharing passwords, it's continuing to generate billions of dollars in revenue because everyone is watching our shows and talking about our shows and buying our merchandise and talking about our shows and watching our shows. How about we make it like impossible to use Netflix and ban everyone who doesn't log in every single day? And then that happened. I'm just kidding. I don't think that's exactly when that happened, but that is what they did. And yet somehow their stock was like unaffected by it. But it's so annoying having to log in every single time I want to use Netflix. Anyway, this stock really, really expensive. Although I will say trading below average price, analysts say buy, financials, of course, money, money, money for Netflix. I just think that this one is too expensive. These partial shares, we're not going to see any return on a $20 investment into a $554 price per share. But as always, it's not up to me. Lastly, we're taking a look at Paramount Global. This thing, I threw this thing in here because I wanted a fourth. This thing looks like trash. This stock looks like garbage. Like, what even is this? This thing trends down more often than it trends up. The only way to make money off of this stock is to buy it at $2 a share and then, hope something like this happens before something like that happens. So, similar to AT&T, okay, so I will say, I did say the same thing about AT&T, right? Similar to AT&T, I think the move for this one is you just got to get it while it's low enough, sell it once you've made a little bit of profit, because inevitably it's going back down again. That seems to be the exact same thing for Paramount. This thing goes up and you make your money and then it sells off like crazy. And then you buy it when it's really cheap and then it goes up again and then it sells off like crazy. And then it goes up again and then it sells off like crazy. So right now we are in the sell-off phase. And it can't get much lower than this. So analysts, the analysts actually don't like this one. They're saying hold it or sell it. 70% is hold or sell. 26% is buy. So this one really is like stay away. Guys, if you haven't voted yet, you can join the Telegram. 100% free to join. Thank you to everyone who is watching and voting and participating. Appreciate you. Guys, don't vote for Paramount. Please. Don't vote for Paramount. 37 votes in so far. IBM and AT&T was close. 28 votes for IBM, 26 votes for AT&T, 23 votes for Waste Management. That was a close one. This one not as close. 60 votes in, 33 votes were for Visa, 12 votes for Amex, and 15 votes for MasterCard. We have 40 votes in right now. Go ahead, guys, if you haven't joined, if you want to. Totally free to join. You can vote right now because we're about to buy the stock. I'll give it a few more seconds because it looks like some votes are still coming in. These were fun. Sometimes we don't always stream when we buy stocks. That's the other thing too. That's the other reason you should join the Telegram. Sometimes Nick and I are just sitting at our desks and we're like, hey, let's buy some stocks. And then we throw it out into the Telegram. What should we buy? not even streaming. We're just like, hey, vote. What should we buy? In fact, that's what was going on with. I know I'm scrolling up like a ton, but it's because we haven't done this in a little bit. Yeah, so that's what I did with these. I sent these out at 10:30 in the morning, and then I waited until the end of the day to buy them, just because I wanted as many votes as possible. So that's fun to do. But 43 votes in now. My vote is, gosh, I can't believe I'm doing this. But from Stock Screener, the best today, NDCVF Nordic Semiconductor ASA. I will look at that in just a second. As much as I don't want to do this because I have such a grievance towards this company, I can't deny, but I want to make money, and I can't deny that I think the best option is Disney. And of course, I knew you were going to vote Netflix. Guys, Netflix is way too expensive. But I don't have a choice. I want to revolt. I want to revolt against the poll. But I'm not going to. All right. We bought Netflix. NDCVF. Is that the ticker? NDCVF. Nordic Semiconductor. What in the world is this? What am I looking at? What? What am I looking at? So I don't know what I'm looking at. Here we go. Weekly chart is kind of better. So this thing boomed in 2020 from $2 to $37 a share, and now it's in a pullback. Analysts say buy or hold. It's trading at technically a high price right now. Financials have been really bad. They lost $12.5 million last quarter after bringing in a net income of $1 million in quarter three. They then lost $12.5 million in quarter four. Total revenue was $108 million last quarter, which was a 43% decline from the previous year. And their operating income, people much smarter than me probably know something about this, but this to me is like crazy looking. It's crazy looking. You need a stock screener to fill up the portfolio up on daily percentage surplus. Look into that. All right, so we have finished up for today. We bought IBM, which I liked. I liked that move. We bought Visa, which I was very okay with that move as well. And then we bought Netflix. Should we buy some Disney? Type yes in the chat if we should buy some Disney. If enough people type yes in the chat right now, I will just go ahead and buy some Disney. Because I was thinking about buying, adding more into something that we already own, like Lockheed Martin, which has been a good, just a winner in general for us. You can see, so this is interesting. So this position ratio shows you what percent of your portfolio this stock makes up. So for the most part, we've been buying $20 worth of stuff. So you can see that it makes up about 5%. Here, we only own $10 worth of Home Depot. So that's about 3%. We own $40 worth of Tesla. So that's nearly 12%. So that's just kind of a cool way to look at stuff. And then we also have our open P&L. That's how much money we have made or lost on each of these stocks. Open P&L percentage. What percent up or down from our entry point are we? So we're up 3.41% on McDonald's. We are up 4% on Coke. Up 2.22% on Lockheed Martin. Mr. Strauss wants me to buy Disney. Anybody else? Can I get a little bit more support for buying Disney? Mr. Strauss, I appreciate your support, but I don't want to break my rules. I want enough people telling me to buy. I can't buy it on my own whim. That would be unfair to the spirit of the A1 Trading community stock portfolio. Mr. Strauss is my only supporter. Oh, well, one of these days. Dude, we might just have to buy Disney. I don't know. I think this is the beginning of the upturn. I really do. Guys, I'm calling an audible. I was considering putting one last poll in and adding buying another share of something that we already own. I think I'm calling an audible. Mr. Strauss, this one's for you. I'm going to buy some Disney. They've been losing money for too long. It seems like it's turning around. This is a great time to get in. I'm doing it. I'm buying Disney. Market $20 buy. I mean, I did. I listened to you guys. I bought Netflix. So the poll worked. We bought Netflix. But I got to get my hands on this Disney. I think this is the beginning of the upturn. All right. There we go. I called my first audible. But I think this is going to be, I think that's going to be a hit. We will see. All right. That's going to wrap it up for today. Thank you for hanging out with me, everybody that stuck around and watched. We do this once or twice a week, but you never know when we might put something in the Telegram. So join our Telegram. Again, last time it's 100% free to join. You never know when we might drop a poll in there. Just one quick little vote, and then you get to add to the portfolio, get to update it, see how we're doing. Today, for the first time ever, we were in overall profit. We are no longer anymore because we're losing money on Netflix. But yeah, that's going to do it for today. Thank you guys for watching. We just did an impromptu 3-hour stream out of nowhere. Where's Khabibi? You just missed Khabibi. He was on about 30, 45 minutes ago. feel free to go back and watch. He had a really interesting conversation with Chris Pulver. Love having Chris on the show. Nick was before that. But yeah, thank you guys for watching, and we will see you tomorrow.
Thanks for hanging out and talking stocks with me. And remember, if you're looking to start your own stock portfolio for long-term investing, you can get free stock shares just for signing up with our partner broker, WeBull. We'll drop the link in the chat now, or you can find it in the description down below. If you're not in the US or UK, don't worry. You can still buy and sell stock CFDs with Eightcap, which is also linked below. We'll see you next time.